Oh, brother, oh, brother, oh, brother. Welcome back to another episode of the Matt Kohrs Show. Where you're Matt, I'm Kohrs, and together we are the show. Good morning, folks. It is a beautiful, beautiful Tuesday. Well, at least it's beautiful where I live, and I just assume you guys are all my neighbors. So it's a beautiful day where we all live. What is the saying? You're becoming the third bear to the podcast? Are you what? That's a saying? They have sayings about bears and podcasts? What? All right. Well, that's already knocked me off my game for the day. Now I'm already self-conscious about everything. But folks, it is a beautiful Tuesday, June the 11th. The market not looking so good. Now, granted, depends on the time frame you're looking at. If you're looking at where we closed yesterday to where we are right now, not looking so good. If you're on the daily chart, you're going to be like, wow, we're really, really close to an all-time high. So a lot of the times it's based on the time frame you're looking at. Bullish, bearish, it's all whatever. It doesn't matter, dude. It's all we round up, we round down. It is what it is. Man, I had a little bit of a debacle this morning myself. Maybe that's why I look a little flustered. Maybe that's why I look a little like not on my top game today. It's because there was a large coffee debacle involving Piper. Out of nowhere, she decided she wants to see if she can push coffee cups off the table. And to everyone's surprise, she can. So now she likes pushing full coffee cups off the table because she does that kind of a thing. So that was my morning. My morning also involved using many, many paper towels and Kleenex wipes and this like weird little mop thing because it was everywhere. There is a large spray zone when Piper gets involved. So that was my Tuesday morning. I hope yours is going a little bit better. But regardless, we're going to make it amazing in the market today, crushing it. So here's the game plan, and I hope this is cool with all of you, my digital internet friends. I'm going to give you a quick little breakdown of what's going on in the world of U.S. politics because there's a new trial that's currently under the way, and this one is for the president's son, Hunter Biden, who was apparently buying weapons while smoking crack. That's a sentence that it sounds absurd. It sounds obtuse. It sounds made up. But yet, that is the world we live in. That is the current version of our simulation that, yes, the president's son is a literal crackhead. So that just sounds fun. I want to get into it because I think it's absolutely hilarious. And then I actually want to talk about how Biden's pulling ahead in the polls right now. I know over the past couple of weeks that we've been on like a weekly basis studying the polls. Trump was actually kind of heavily in the lead. And now actually, according to 538 from Nate Silver, who, just to be fair, he is a little bit more left-leaning, but obviously he's still pretty good at math. So right now, actually, Biden is ahead in the poll. So I want to get into that. Then I want to talk about the overall market, things like the SPY, the Qs, gold, bonds, yields. And I want to give you a shout out to the seasonality for the day and the major things to pay attention to today. And then we should also get into some of the news for individual stocks, such as what in the world is going on. CrowdStrike's looking pretty good. I want to talk a little bit about Oracle and Broadcom because they're reporting this week. I want to talk about Apple. They had the Worldwide Developers Conference yesterday. Then Elon hit back because he didn't like what they were doing with data and privacy related to AI. Then I want to talk a little bit about what in the world is going on with GME and Roaring Kitty, who has lost hundreds of millions of dollars in a couple of days, and then maybe a little bit of DJT if that is cool with all of you. So that's what I want to do. I hope that's cool with everyone. If it's not cool, you could always make the show better yourself by sending in more clips to react to or calling into the show. So for any of you, if you want to call in the show and just let me know your thoughts on life, 570-209-8435. We'll play some voicemails a little bit later today. And then you could always send in shows for me to like kind of react blind to, obviously, as long as I haven't just arbitrarily seen it myself. But with all that being said, if you want to join the trading Discord, it's pinned to the top of chat. It's in the description of the video. And with that out of the way, let's rip, rock, and roar. So this is what I was saying, where the SPY, that's the all-time there, Friday the 7th, right halfway through the day after getting the unemployment report, we tagged a new all-time high. Is it a new all-time high adjusted for inflation? No, but no one really looks at the market like that for whatever reason. So yeah, pretty strong. And we're not that far away. But as I alluded to, if you're looking at it just from where we closed yesterday, like if you were swinging a degenerate 0DTE call, you're probably not feeling the best right now. I'm also not feeling the best on coin. I was feeling good when the market closed with coin above 250. Now it's back down to 240. That sucks. And then GameStop just kind of flat, all post-market and pre-market. So that's a little bit of a general vibe. The headline, stock feature slip as investors gear up for the start of Fed policy meeting. Just so everyone knows, and I'll inform you guys about this. The FOMC meeting, the Federal Open Market Committee meeting, that's where all the Fed presidents, the voting members meet up, they chit chat, they decide what they're going to do. And it starts today. It's a 2-day meeting. It starts on the Tuesday. We always get the results on the Wednesday at 2 p.m. And then Jerome Powell speaks at 2:30. And how's it going to go this time around? They're not going to change rates. That's it. They're going to say, hey, we're keeping the Fed fund rate consistent. It's going to stay at 5.25%. And we are going to wait for more data to come in to understand what we should do in the future. This time around might be a little bit more interesting based on what we just saw happening in the Bank of England, what we saw happening with the Bank of Canada. So they're actually starting to cut rates already. And it's interesting, especially with the Bank of England. They're cutting rates even though they increased their inflation predictions. So that doesn't really make sense, but also what in life does make sense. So just want to give you a little bit of a trailer version of what's to come. But first, you should check this out. I don't want to go through the entire thread with you just because I want to respect your time, but check this out. Her name is Mia Cathell, Cathell. She has a mega thread of all the initial evidence presented in the Hunter Biden gun trial. I'm not going to go through it all. You could read it. Here's the gun that he bought. Well, here's another gun, guns. And then it gets really funny. Here's the evidence, blah, 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 videos of him and now proving it's him. He's not really denying it. Pictures that were already released. We knew that from the Hunter Biden thing. Really interesting ones. Looks like he's a party guy, obviously a bit of a party guy. We got some ones of just him weighing his crack, just a very classic thing for most people to do, including the president's son, just slapping some pictures on the internet of your crack. So that's interesting. Where was my favorite one? There was one that really I thought was interesting. Pictures and videos of Hunter Biden smoking crack while nude. Okay, interesting visuals to give to the jury. Here were some videos of him. So not only did he take videos of him weighing his own crack, he also had pictures. He wanted to get all forms of media. This is so wild, the world that we live in, that we have Trump on trial, we have Hunter Biden, and Hunter Biden, they should start to splitting costs. Honestly, they should split costs on lawyers, because at this point, they're going to, when you get ice cream and you get the 10 ice creams and your 11th is free, I think that's what Trump and Hunter Biden should do. Save themselves a little bit of money, because the amount of times that these guys are going to be in the court system over the next year or two is insane. So Hunter, basically, for those of you, this might be surprising, but if you're a drug addict, generally in the U.S., you're not supposed to buy guns. I don't know if we have people who are international and you're like, what's the issue? I see you're talking about crack. I see you're talking about guns. In a general sense, in the U.S., if you're smoking crack, probably shouldn't be buying guns. Now, I know that might be a surprise, but it's an issue. In fact, he could face up to 20 years in prison. And then later this year, he's actually also going to be in trial for a tax evasion type of a thing. So I don't know. That's my wild idea of maybe just save some costs of apparently all of our politicians and their immediate family members for one reason or another are doing something absolutely crazy. So that's a bit of an update there. And with all of that in mind, should this have an impact on the election? Maybe yes, maybe no. Obviously, Hunter Biden's doings, his extracurriculars, are going to be directly related to his father. It's a little bit different, obviously, if the father or the administration was help covering it up, this, that, the other thing. But I'm just saying in general, the fact that it's the same name, we know it's his son. Yeah, there's going to be implications, whether right or wrong. And I thought it's kind of weird because when we saw very negative things come out at Trump, he actually went up in the polls. And I think a lot of us understood why, because they're like, okay, like this proceeding's a farce. But now the opposite's true. All these negative things are coming out against Hunter Biden, and now Biden's going up in the polls. We live in this upside down world where if you're doing negative things, you're more popular, which is wild. I don't know how many of you have seen the movie, The Campaign with Zach Galifianakis and Will Ferrell. Similar thing there. The more, like, obviously that's just a farce. It's a comedy. But apparently it was very reflective of reality. The crazier things come out, the better you're going to do. So the latest polls, no, this is not one poll. It's actually all the polls put together. 538 isn't a single poll. It's a mathematical model on all of the polls. So Biden's now pulling ahead, which is blowing my mind. But I guess if we apply the exact same logic of what happened with Trump, it's kind of the same thing. I guess no PR is bad PR.
Our first election forecast of the campaign season with our ABC News partner 538 is here, and our ABC News political director Rick Klein is here to break down the numbers for us. Nice to see you, Rick. Good morning.
Yeah, good morning, Rebecca. So let's start with the 538 polling average, and you can see it's a dead heat. Trump up by about a point nationally. That is a slightly smaller lead than he held right before the guilty verdicts, but basically it's been where the race has been for a long time. But now, for the first time, check out the 538 forecast. They simulated hundreds of possible outcomes, and you can see it's even possible there's a landslide on one side or the other, although that's not likely. As of this morning, 538 sees a 53 in 100 chance of a Biden victory. It's basically a coin flip. Now, the forecast is different than a polling average because it takes into account other factors like perceptions of the economy, and it tries to account for how much the race can change between now and November. And how is it so close? Well, check out the 7 biggest battleground states. President Biden,
just want to clarify, not long ago, Biden was only tied in one of these, and now he's actually leading in 3. So before this, Trump was dominant in almost 7. It was 6, and then they were tied in 1. So really, obviously, it's not just popular vote. You guys all know it's the Electoral College. But what's interesting, in some of the swing states, this is where Biden is specifically pulling ahead, which has larger mathematical implications on the entire election.
Very slight favorite, a small lead in the upper Midwest states, the so-called blue wall. Trump right now, a narrow advantage in several of the Sun Belt battleground states. And here's the thing, even small shifts by voters can have some big, big impacts. This is the simulation where if the election were to land on turnout and vote choice, just like it did in 2020 when Biden won. But let's assume for a second that youth turnout drops by about 10 points, and you see third-party candidates getting a little more support. You see the electoral landscape shift just based on that alone, a very real possibility. Trump really favored to win. And another scenario, if you see a shift in Black and Latino voters, 10 points more to Trump, again, something the Biden team is worried about, you get a map that looks like this, Trump winning by an even bigger margin. And one more note on all of this, third-party candidates, the 538 forecast sees no realistic chance that any third-party candidate wins, but they could definitely matter. In fact, 538 sees a 2 in 3 chance that Bobby Kennedy and others will get more votes than the difference between Trump and Biden in critical battlegrounds. That is a potential for someone to play spoiler, though it is not clear in which direction,
Rick,
guys.
if you go back a few screens, that one where you had the polling averages in the battleground states, that one right there.
Yeah.
In that outcome, actually, it's a 269-269 tie with Nebraska's 1 congressional district deciding.
That's right. Right now, favored for Biden, that would be the decider as 270 if he's able to carry that, the one in Maine going to Trump. It is that close an election. There's a chance, it's a very remote one, but a chance actually of an electoral tie.
Long way to go.
All right, so that was a little bit more of a long-winded breakdown. If you want to check it out yourself, this is free, but you could just search 538, like 538, and they kind of get into how they did this. Once again, this isn't a poll. They're taking into account all of the polls that they've had, the strength of those polls, and this is very much in the nerdy math world. What I kind of thought was interesting here is to see how things have changed over time. So as we've been watching now for a couple months, Biden has been dropping as Trump has been picking up. But recently, right when it was like, oh, Trump taking a lead, Biden just bounced. You know, he must have found a little bit of support while Trump ran into a little bit of resistance. Obviously, we have a lot of time. We're going all the way up to here to November. We're just halfway through June. So a lot can change between now and then. But remember, what matters here is not popular vote, electoral votes. It is very, very easy to not, well, I shouldn't say very easy. It is very mathematically reasonable to not win the popular vote, but to win presidency through the electoral college, just the way it's all going to be set up. So electoral votes is what matters. Obviously, people are going to talk about popular vote. Popular vote is mathematically a little bit harder to model just because the math, you have to figure out the majority per state. Obviously, some have a little bit of their own weird rules, but then you're like, okay, if we're confident in our prediction for the state, then we just know they're going to get these electoral votes. Popular vote, you're going to see the confidence margin right there. 95% of outcomes fall within this range. So it's literally just your confidence bands. Obviously, that's a very well-known statistical, verbiage and analysis. And then win probability, once again, Biden was going down, Trump was going up, and they were just intersecting at the beginning of the month. And now it's kind of deviating a lot. But I would say the safest thing at this point is saying, oh, okay, it's pretty much 50-50. We're seeing weird trends. We're seeing weird changes. And it's just, there's a lot of time between now and November, so a lot could happen. But right now, in your mind, you should think it's about 50-50. So whoever you support, I don't care if it's Biden, I don't care if it's Trump, I don't care if it's Kennedy, you should go and vote. Go make your voice be heard. Like I said, I do not care who you vote for. I ask you to be a little bit informed. Whatever the major voting topics are for you, give it some real research and then go vote. You have to vote. I don't care who you're voting for, but make your voice be heard. Now, with all of this, it still makes it not it's still always going to be funny of just these somewhat of memes that are going out there. And this is a recent Biden one. And I can't put my finger on it, but it's just oddly racist of what's happening. Of you have Kamala Harris's husband and then Biden, who it's just the most awkward thing ever. This is truly a very cringe thing. That's how I felt the first time I walked into a Texas Roadhouse, folks. There's never been a better also, what's the vibe down here? What's going on with this individual?
I don't wanna love nobody but you. I don't wanna love nobody, love nobody.
And he got scared halfway through.
I don't wanna love nobody but you. I don't wanna love nobody but you. I don't wanna love nobody, love nobody.
This just happened. Either yesterday or on Sunday. So cringy.
I will never the rest of my life. All I wanna do is make you proud.
Who are you gonna vote for? The audience wants to know. So you guys get the idea. Now I have to do this with my left hand. She really wanted to be a part of the show. Oh, you don't want to be a part of the show anymore? Down? All right, you can go on your bed. All right, got her. We're good. You need a nap? Hard nap? She probably needs to nap because she was now she's back again. She probably needs to nap because she was also the exact same cat who was up between 2 and 5 in the morning. We let her watch a little bit too much WWE recently, and she's been really, really working on Rey Mysterio's 619. And I have to be honest about it. Even though it's annoying, she's really good at it. So as much as in the moment, I'm oh, why is she waking me up right now? In pure, I guess, just athletic analysis, she's really been hitting it. So, I don't know. We got to really cut down her worldwide wrestling entertainment time. I guess it is what it is. All right. Back to the market. Today, Tuesday, June 11th, the main thing you need to know about in terms of the overall market is the 10-year note auction. It comes out at 1 p.m. Eastern. For those of you who know a little bit about bonds and yields and fixed income, the major thing you're going to want to pay attention to is this little highlighted number down here, the bid to cover ratio, 2.49. If the number ends up being higher, that's generically thought to be bullish because it means there's a larger appetite to buy these particular treasuries. If the bid to cover comes in below 2.49, that's generically thought to be bearish because there's less of an appetite, obviously all relative to the recent auction. That was the past bid to cover. So the line in the sand is 2.49. Above, thought to be bullish. Below, thought to be bearish. You could also look at some of these other things. The high yield the last time around was 4.483. You could look at how much was allotted at that high yield, and you can also you could really get into some of the specifics here. But the key thing is what was the high yield, and then also what was the bid to cover, and they're kind of inverse. Above on bid to cover is bullish, and below on high yield is bullish. So they're a little bit inverse of each other. So it just has to do with the appetite of the market. So I just want to let you know about that. Looks like some people are already talking about Rhythmic, the Rhythmic issue affecting multiple prop firms. This is not isolated to Apex. Oh, well, okay. I do want to talk about Apex in a little bit. But anyway, coming back to the Fed and fixed income and bonds and yields, Fed's higher for longer stance hits firms that expected rate cuts. Now, who did it hit? Well, a lot of people. Money itself became more expensive as you end quantitative easing, jack up quantitative tightening, and then also jack up the Fed fund rate. But who really got screwed here were banks that, for whatever reason, decided to YOLO into bonds. This is what happened. This is why you're hearing about banks being under pressure, and why we have banks blowing up, is because these people who were allegedly the smartest people in the room were buying bonds there. They're like, let's just keep buying bonds. Let's buy bonds on leverage and more leverage. And then let's get tilted and buy more bonds. There's no way that they're ever going to jack up the Fed fund rate, right? And then they did. So I don't know if really in terms of retail, if it's explained why banks are blowing up. It's because they went full tilt on bonds and then it got smashed. And now you might be thinking, but hang on, it doesn't really matter because if you hold out the duration of the bond, you're going to get your money back, so they shouldn't be screwed. And you're right, unless people need money and they come and do what's referred to as a bank run, or they get their money out and then other people get worried about their money out, and then all of a sudden that prompts a legitimate bank run. And if you have a hole in the short term in your balance sheet, well, then you might have to sell something. And if you have to sell something, well, you have a lot of bonds. So now they might have to sell bonds at a massive loss. So it kind of depends on just truly the liquidity of the bank itself. But anyway, I kind of wanted to quickly explain it because I know we talk a lot about banks, and PIMCO is coming out saying, oh man, I mean, just last week we heard that 60 plus regional banks are once again under pressure. In terms of banks, that's why. It's just they had so much bonds at such a high price. Bonds dropped. People needed money. They started taking money out. Then the banks were like, oh, we don't know if we want to give you your money. And then people got scared and they took more money out. So then they were forced to sell it at a loss. And then they had to go from an unrealized loss to a realized loss. And it became a whole mess. Now the question is, are they going to have relief anytime soon? Well, the answer to that is, what is your definition of soon? If the question is, are they going to feel relief in the month of June? Probably freaking not. Right now, the Fed fund rate is at 5.25%. And remember that the Fed fund rate has the greatest impact on shorter duration bonds. So it has the greatest impact on the 2-year rather than the 30-year. It's going to impact shorter duration. But anyway, 5.25%. There's a 99.4% chance that tomorrow at 2 p.m., when we get the results of the Fed fund meeting, once again, tomorrow at 2 p.m. is when we get the results. Jerome Powell will be speaking at 2:30 Eastern. But anyway, 99% chance that it's going to stay exactly where we're at. Now, I was saying, okay, what's your definition of short term? If you're wondering about July, no, as of now, there's a 91% chance that we stay at 5.25. It doesn't really start to change until September, November timeframe. So by the time you get to September, it's a 50-50 shot. By the time you get to November, that's when it changes a bit more. It becomes a 2/3, a 70% shot versus a 30% shot. So yeah, I mean, mathematically, there's a way we get out of the year with no Fed fund changes. And then there's also a small chance that we get a cut in July, a 10% chance. So somewhere, it does seem as if between now and the end of the year, we're going to have at least a rate cut, but I would not be holding my breath on it happening in the summer session. Now, talking about individual stocks, earnings season, in my mind, it's over, but there are still a couple stocks worthwhile to talk about. Tonight, after the market closes, pay attention to Oracle. And then tomorrow, after the market closes, pay attention to Broadcom. And then Thursday, after the market closes, Adobe. So I know once in a while, these ones are mentioned. So I just wanted to share that with all of you. Speaking of individual stocks, CrowdStrike, some people were talking about it yesterday. CrowdStrike rallies to record on cybersecurity companies' inclusion into the S&P 500. Why is this big? Why is this important? Why is this bullish? Well, there's many people who run their own funds that mimic the S&P 500. So when a new stock is put into it, they have to buy it if they want to properly mimic the S&P 500. And then the ones that are kicked out, obviously they sell those. So generally inclusion is bullish because there's legitimately just forced buying, and then exclusion is generically bearish because there's literally just selling. So a little bit of news there on the cybersecurity world. The other news in the world of tech yesterday was Apple. Apple unveils AI for the rest of us in bid to retake spotlight. Apple stock has actually been doing really well, obviously with the raise of AI. It's called Apple Intelligence. Now, it's kind of interesting. At first, when I was listening to it, when I was paying attention, I did think it was pretty cool, but then I got a little bit lost. Apple Intelligence on your phone probably requires an upgrade, and then people were diving into it, and Elon was one of them, and he's like, whoa, what are you doing with the data, brother? Elon Musk threatens to ban Apple devices from his companies over open AI partnership. And once again, it just has to do with what he called an unacceptable security violation. And basically, if it's on your phone, they're going to kind of have access to everything. Obviously, the other hot stock right now is GME, aka GameStop. So Roaring Kitty, Keith Gill, posting some stuff, Citadel, the cat. I don't know. I just thought that was funny. This is actually the tracker, but he had posted this picture. But what he himself did post was his position update. This is after the market closed yesterday. Yesterday alone, down 51 million. From his high on Thursday/Friday, he was at $500 million. He was at $500 million. Now he's at 174. Now, $174 million, that you're not poor, but also percentage-wise, that is a massive drop. He was up $300 million. Now he's up $30 million. Like I said, that's a lot of money, but I'm just saying percentage-wise, that is quite a fall. Now, for those of you curious about GME, slowly but surely, the short interest is going up 21% throughout the day today. We will be able to track what's going on in the world of options. I have that fired up for you. The other one that people have been asking about, just because DJT had their new S1 amendment come out yesterday, short interest at 11%, cost of borrow still sky high, utilization still sky high. Don't forget, you can get on the newsletter pinned to the top of chat in the description of the video. If you use the code Goonie, you can be a premium member, aka a supporter, for free. If you use the code Goonie, double check that promo code is appropriately applied when you hit subscribe. But anyway, I break down the week. I let you know all the major macroeconomic events. I call out all the earnings. I give you the seasonality. Today, seasonally is actually notably bearish. Today's seasonally notably bearish, just so everyone knows. And then I give you an update on Piper. That was all of last week's number. Piper's signal traded with perfection. Yesterday also crushed it. So you can see right here, I know there's a lot of gurus out there, so I like to show you the timestamps of everything. 10:09, Piper suggested a SPY put credit spread, a Q put credit spread, bullish with a 3 out of 5 confidence. If you took that, the minimum sizing would have been 162, and it would have returned $38. Obviously, you could scale it up to your heart's desire. I myself traded on SPX just because it's a little bit more liquid and European contracts are a bit better. So anyway, you can see I got in at 10:08, out at 11.23, sold at 2, bought back at 110. So that's how I quickly made $900 or a 45% return. So I just like to be as transparent as I possibly can. I show you this stuff in real time. It's none of that Monday morning quarterbacking. So if that's something you're interested in, if you want to be in the Discord, you do have to be a supporter. On Locals, you could be a member or supporter. Membership is 100% free, and supportership, a premium member, you can get for free for the first month if you use that code Goonie. And with all that being said, let's get rocking. Let's get rocking. So on the screen in the top left, you have the SPY, the ETF tracking the S&P 500. You have the Qs right below that. Then you have old GME, and then you have old coin, which got rocked in pre-market trading. Absolutely rocked. But folks, we are a couple seconds out. So with all that being said,
orders
dingity ding, ding,
Target
ding.
filled.
The casino is open. Best of luck to all. Play responsibly. If not, have fun. All right. You heard that some trades were already trading. Some trades were already doing their thing. What was that? Well, that doesn't seem right. That one was on. No. Slippage? Positive slippage? Usually slippage never helps me. These were supposed to go for 200 out of the gate. One got 200. The other got 500. The other got 1,000. I'm just a little bit in shock, folks, because like I said, normally I'm the guy who suffers from slippage. Usually it doesn't break in my way. So I don't know, like maybe should we document this? Should I cut this? Because I don't know if slippage ever helps me, and yet it just helped me to an extra, to the tune of an extra $800 and an extra $300. I'm going to take it for sure. I'm stoked, but I'm just shocking off, folks. I'm just generally not the guy who benefits from slippage. So that's exciting times. Exciting times. All right, where are we at? Coin getting hit, of course it is. GME getting hit, of course it is. SPY getting hit, but then yet the Qs.
Order submitted.
Are we trading again? All right, this one fully expected. I'm not actually surprised
Target
about this
filled.
one. That one good, but it made more. No,
Order
no, that was the
filled.
one that made the 200 that I expected. I think. I don't know, dude. We're all over the map right now. TOS. Thinkorswim is down, like a data issue. Have you taken advantage of Apex's 250 promo for some DGen trades? I have. I have 2 of those accounts just because, like, I don't know, it's fun. But I just like the math of the 50K accounts makes a lot more sense in my mind. Now, I want to let you know, you can be successful. I'm not saying it's easy to be successful, but you could definitely be successful on all of those accounts. Just for me and how I see the market and the type
Order
of stuff
filled.
that I do, the 50K account does seem to make a bit more sense. Charles Schwab is down. Yeah, Charles Schwab owns TOS. So that's why that's all down. Well, the old random ass shuffle, a little bit of a pump, a little bit of a dump, a little bit of a pump. The Qs are just whipping around. Do I have any live positions? I have no live positions right now. So 1, 2, 3, 4, 5 accounts have already traded. 225, 225, 725, 1075, and then 225. 1,000, dude. That one's going to come back to bite me in the ass because of that consistency rule. I need to remember that. Let me write that down. Account 266, because that means 266, 1075. Because that means for those on Apex, there's a consistency rule where no one individual day can account for more than 30% of your profits. And I'm generally targeting 52,600 because that's where you can take money out. But now I have one day that accounts for too much profit. So that means this account, I'm actually going to have, where's my phone? Where'd you guys put my phone? So just the quick math on it, I'd have to, what are we doing? 1,075 divided by 0.3. So now I need to have 3.6K instead of 2.6K to be able to successfully get the money out on that one. All right, the Qs are taking off like no other, and I'm getting alerts on Tesla. Tesla's breaking down? Tesla's breaking down? All right, well, we have a potential issue here on Tesla. A little bit bad at 172. Maybe it can save itself. I would say it's particularly bad sub 168. So you might want to throw an alert there, and let me lower this just in case there's some sort of reversion, but got some alerts going off on old Tesla. The market, well, tech must be doing somewhat okay. Coin's getting destroyed because Bitcoin's getting destroyed. Bitcoin coming right to the bottom of this range. This is my danger zone where I might have to cut what once was a really good coin play to now it's becoming a really bad coin play. But I have that. There was a new swing play on Amazon, which is actually looking pretty nice. Everyone who's on Locals actually got that. Where was that at? I could show you. So this is just to show the kind of stuff you get. I've actually been even putting my swing plays in. So you could see posted 19 hours ago, new Amazon swing trade. Obviously, I posted this June 10th, 19 hours ago. I got into Amazon June 28 calls, which are actually now looking pretty freaking good. And that alone clearly, GME's breaking down, getting smashed, dude. Things are getting smashed today. Apple's popping. Apple. Where's Apple? Where's old Apple? Apple up 1.6%, moving. How's this looking? All right, here's the options market for the SPY, the S&P 500. And then let me fire up another one just because I know I'm going to get a lot of questions about GME. So let's put that up there as well. Come on, GME. Getting dumped today. Oh, people are buying puts and selling calls out of the gate. Will that be the trend all day? I mean, I have no idea. Your guess is as good as mine. I'm just saying, in terms of the first 6 minutes worth of data, it is getting crushed. Actually, let's look up Apple. Since Apple's moving, let's see what's going on there. Ooh, look at that. See, that's bullish. A little bit of a different vibe. This is a pretty bullish vibe. You can see people are just buying calls and a little bit of put selling to get out of their puts, but mostly people are buying calls. Well, in comparison, you can see what's going on with GME right now, where it's just getting dumped and people are selling their calls and buying puts. Just the tale of two, like obviously bearish, obviously pretty freaking bullish. So Apple versus GME, just two completely different stories. People are loving longer dated calls right now on Apple. Jeez, Apple. Whoa there, brother. So breaking out of the year-to-date high, we're like at the year-to-date high right now, and then the next interesting level would be 200, the old key psychological level of 200. I don't know. Maybe in like my retirement account, I have some Apple. I'm not personally actively trading Apple right now, but I definitely wouldn't. I would have to look and see how expensive it is, implied volatility. It's cheap. So the question was, should you buy calls or sell puts? Right now, it's cheap. All that red means premium cheap. So I'd be leaning towards buying calls rather than selling puts. And it's actually particularly cheap down here at 180. But you could see it's within the bands, lower end. The skew of it, that does, it flattens out right there, which is weird, but here, that's a lot. That's a little bit better to be selling puts. That is strong. The options market is loving. And have they been loving it? How long has this been going on for? Let's do from the start of the month. Let's see how, or let's go back a full week. So this is the generic movement. So it actually, the options market was bearish, then had a big pop, then got even more bearish. And it actually wasn't until recently that it really, today is the day that it started picking up in the options market. Interesting. Potentially a good opportunity. Anyway, that's Apple. Part of the reason why the Qs are going. The SPY getting really whippy, not knowing what it wants to do. SPY's flat. Similar to yesterday, I'm actually looking to run back my playbook from yesterday. Now, yesterday, right when the first 15 minutes opened, I said, hey, when I see some bullishness, I'm interested in playing the market up to the previous day's close. So on Monday, yesterday, I saw the dip. When I saw some strength, I was like, I really like this idea of playing it up to the previous close. And it ended up hitting around 11:15. That's the exact trade that I showed you. Today, I'm looking to do a very similar thing. If I see bullishness, if I see a recovery, I'm going to be looking to play it up to the previous day's close, but that's a big if. I know a lot of people try to be predictive in this game. I think that's as like dumb as it can fucking be. I think the best way to win in this game is just to be reactive. Be reactive to the actual movement and not trying to be predictive of the next bar. Whatever the trend is, the trend's your friend for a reason, especially for short term. Investing is a game of prediction. Trading is a game of reaction. It very much is. And a lot of people like to conflate those two things for whatever reason. But let's see how this goes. I am still waiting for these 1, 2, 3, 4, 5 accounts have traded. So I have 15 more accounts to trade. And they should actually be trading relatively soon. I think, at least. We'll find out. Maybe I'll move this like that. Yeah, that lines up a little bit better. All right, so all this is on. 5 accounts have traded. 1, 2, 3, 4, 5. So 15 more to go.
Order submitted.
Okay, and it looks like 4 of them are trading literally right now. Let's see how this, what accounts? 72. Let's go to
Target
72.
filled.
72. 72. All right, let's see how it plays out. We got some live ones, team. We got some live ones. I just wanted everyone to know that YouTube chat voted on a bullish day. So let's see if that turns out to be right, because your first initial instinct, or at least your prediction mapped over the first 10 minutes of the day, has not been quality. Well, let's see if this hits. Looks like it went short the NQ contract. So it's trading on the futures market. That's what Apex does. So if you're on Apex, that's what I'm using. Folks, I have 20 accounts at 50K each. I don't have that kind of money. I'm trading with someone else's money, and the account, or like the company's money that I'm trading with, it's called Apex Trader Funding. Right now, just so you know, there's a 90% off deal. It ends in 14 hours. So basically at midnight tonight. So it's actually a pretty sweet deal. Like I said, to get this funded account, you have to take a test. Basically, can you trade well enough? They don't want to fund like people who don't know how to trade. But anyway, I buy the 50K account. Generally, their full price is $167, but with 90% off, obviously that means it's $16.17. So you could take the test for $17. To be fair, the cost is never really $167. Generally, they either run 71% off deals, 80% off deals, or 90% off deals. So if you do that math, you're either paying 17, 34, or 48. Those are generally the costs that you pay for that account. So right now, this is the best deal. Obviously, it's $17. So the way it works is you pay $17, you take the test. The test on this account size is, can you make $3,000 in profit without having a 2.5K unrealized drawdown? If you can do that, that means you pass the test. And then you convert your Apex eval account to a PA account, a performance account, and then you trade that. And then that's the one that if you do well, you can make money. The way it works is the per individual trading account, because you could have up to 20 accounts with them, per individual trading account, you can actually, what's the exact math? You take out 2K per payment period, and there's 2 payment periods per month. So there could be 4K a month per account. The first $25,000 is 100% yours. And then after that, you're in a 90-10 split agreement with the company. So first $25,000 per individual account is yours, then a 90-10 split where you keep 90% for all the money after that. I'm trying to think if I got all the aspects of it right. There are murmurs and discussions and this, that, the other thing that like people don't get paid out. And I told you guys yesterday that I requested my money, and I just wanted to show it to you. Yeah, you do get paid right here. Here's all of mine. You could see requested on June 5th, June 5th, June 5th, June 5th, June 3rd, June 3rd, June 3rd, June 3rd. These are all of mine. 2K, 2K, 2K. There's 10 of them, but you'll notice one got denied. I talked about this yesterday. I knew one was going to get denied because I broke one of the rules, but when I was requesting, I didn't know which account I broke one of the rules on, so I just requested on all. But going into this was by no means a surprise. I knew one was going to get denied. So I requested for 10 of them, and 9 of them were approved. So that means I was approved for $18,000. So I just want to, yes, approved. You can see I was previously paid. Thus far, you can see I have 48 records, but I haven't been paid on all 48. I've actually been denied on 5 of them. I just want to, well, I don't want to, will that show you my password? I've been denied on 5, which means that in totality, that's 43. So whatever 43 times 2 is, what's that? 86. So I've been paid out $86,000. What happens to an account that's denied? You just have to wait for the next payout period. If you have an account that's denied, you don't lose the account or anything. They just tell you to wait for literally the next payout period, which is why I didn't mind requesting it, because literally the worst case scenario is just wait till literally next week, and then I can just get the money. So it's not like you lose the account or anything like that. What rules? There's various rules.
Order submitted.
Whoa, brother. All right. So more money locked in and more trades executed. Let's go to 267. 267. Let's see what's going on. Can I answer any questions on that? What rules did I break? So they have one rule called a consistency rule, where if you, in your account's total profit, if on one trading day, like one calendar trading day, if that accounts for more than 30% of the total profit. So for example, let's say you make $2,000 on one day, and then for the other 9 days, you make 100, 100, 100. Obviously, one individual day is the lion's share of your profit. They don't want you to do that. They would rather you be consistent over, obviously, whatever trading period. So I knew I broke that rule. And actually, you guys saw the day I did it. It was the day where I was like, oh, like, do you guys think I should take the money? And you're like, let it ride. And on that individual day, I made 1.4K. And the account had a total profit of 3K. So one individual day counted for almost 50%. Now, if you can prove to them that like your trading strategy, like which you are consistently trading day in and day out, just had a lucky day, they actually still will pay you. But I mean, I can't go to them and be like, well, actually you should pay me because like that was part of the strategy. I have a stream and the stream told me to hold and that was my strategy. So I held. They're not going to buy that one for obvious reasons. So it's one of those, like, are the rules easy? Like I see some commentary about this, like, oh, the rules are so tough, blah, blah, blah. Why would they give you money for easy? Like, they don't want to give money to shit traders. A lot of people complain about like the difficulty of it, but as if trading itself is not difficult. Weird rules. Yeah, but it's risk reward. Weird rules, but then you have much less risk. I mean, your risk is what? $17. Then you have the upgrade fee. So let's say you buy a ton of accounts. Your risk on the table for trading 20 accounts might be like 1 or 2K, but you're getting the exposure to trade $1 million. So in my mind, it's just a risk to reward thing and no one's forcing you. If you don't like the rules, if the rules aren't for you, okay, there's other funding accounts and they all have different rules. So I implore you to use the one that you like the best. And I'm just sharing my own experience that I actually like the Apex rules the best. Maybe
order submitted.
I like the Apex rules the best because like I found my groove with it. It took me a while. It took me about 3 to 5 months to figure out what the fuck I was doing.
Order submitted.
It took me about 3 to 5 months to figure it out. But then when I finally figured it out, that 253.
Target filled.
That's how I was able to now. I mean, I just showed you my actual results. That what I said I had 43 accounts, so that's $86,000 this year. Took out $86,000 already this year on it, and obviously there's fees, but I'm net ahead by tens of thousands of dollars. I mean, folks, I'm showing you it in real time. 120, 130, 160, 130, 130, 160, 160, 210, 160, 210, 210, 210, 225, 1,075, 210, 725, 225, 225, 210, 210. That's my 20 accounts. 20 accounts right there, made about what, 4K? Someone could do the math, and that's it. I will give you my biggest tip ever. For those of you who maybe don't know anything about sim-to-funded trading, this might not make the most sense right now, but if you're a degenerate trader, it will make sense. And for those of you who know about it, my biggest tip of how to do this, if you're sitting there and you're like, Matt, I just need a little bit of help. Like, I kind of get it. I'm learning about futures. Here, I'm just logging into my account, so you guys can't see my password here. Blah, blah, blah. Request payout. Okay. So here's my requested payouts right here. I will reload the page so you know it's not like CSS bullshit. I reloaded it. I didn't edit anything. I have 48 records. You can see every single one is 2K. Every single one I'm showing you right here, 2K, 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 paid, approved. So the only thing to know is how many were denied, so we can do the reverse math. 1, 2, 3, 4, 5. 5. So 5 of these were denied. All the other ones were approved. So 43 times 2,000. 86 grand. I have made $86,000. And let's just see my earliest one. The earliest one was December 5th. Okay, so I lied. I'm sorry. I said this year. I made $84,000 this year and $2,000 last year. But you can see the consistency with it. It took me a while. Like, it was tough for me to get going. I was like, okay, like, I don't really know what I'm doing. So I got 1 here in December, 1 here in January. Then I got 3 in February. You can see how it started to pick up and I hit my stride in March. It takes time. I am sorry for lying to you. I did say all this year, but apparently I didn't know that I had one of them in December. So these are the gross profits. I guess I'm just trying to cover everything to like be as like straightforward with you as I possibly can. Those are the gross profits. Of course, there's fees. And what I don't know it, I'd have to look at my credit card bill, but I'm going to be ahead by tens of thousands of dollars at this point. So with it, is it easy? No, it is not easy. Don't show up and think, oh, okay. Oh, wait, someone's saying blown accounts, but it doesn't matter. I got the money. 4 joints. Did you see that it said paid? That's very important. Paid. How about a safety net so you don't blow an account? I have safety nets. What I'm doing is my mindset. Okay, so I traded a little bit differently than anyone else who's doing this. Like, I know there's a lot of streamers and content creators in this space, And I just approach it mathematically a little bit different. So the way a lot of people do it is they get all 20 accounts, and you'll see it. You could probably find a streamer right now trading 20 accounts, and they trade them together. So like basically whatever happens on one account is what happens on all the accounts. To me, mathematically, that doesn't make sense. With a person with a background in systematic trading, that like, I want to trade 20 different systems, because if one messes up, at least I still have 19 others. So I think people are missing the opportunity that, okay, like, let's say you're like, oh, I have a system, you like to buy the dip. Maybe some of you like to buy the breakout. Maybe some of you like to trade in power hour. Maybe some of you like to trade in the morning. What's so cool about this is you can now use each individual account almost as a test for like one of your thoughts. So like, let's say I have a generic idea where I'm like, you know what I'm going to do? Every single time that I was trading NQ, every single time it crosses whatever, a certain EMA, I just either want to go long or go short. Maybe that's your idea. Maybe that's your idea that you're going to test. Well, you can trade that in one of the accounts and then track how that would do over time. So for me, I very much want to get to the point where I can request out all 20 at once, because that would be 40K in a payment period. But to be completely honest with you, I don't know 20 good strategies. I'm trying to figure it out. I know about maybe 8 to 10 decent strategies that if they can catch a good trend, like you saw the one this morning made $1,000. Okay, great. That's awesome. But I don't know. I think of it in the game of the law of large numbers. If you're sitting down and playing poker, even with the best setup, you can still lose. You can be dealt pocket aces. You go in, someone goes all in before you see any cards, and you're like, well, I have the best hand I possibly can, so I might as well go all in, and you can still lose. So that's why I'm not the biggest fan, at least as of right now. Maybe I'll figure it out in the future, but I'm not the biggest fan of trading all the accounts together, because if you take a bad beat, you lose all of them. It's not like they say, oh, it was a bad beat. Sorry, we'll give you your accounts back. So for me, I want to test these different methodologies, because then if there's a bad beat, at least the pain and the hemorrhaging is like just kind of a subset. Like it's something that's obviously going to be a little bit more manageable. That's how I view it. I know it's different. I know a lot of other people. I know of many, many other people like to trade them all together. And to be completely honest, a lot of those people are far more successful at it than I am. So like, this is not me saying I'm better. It's not me throwing shade, because I fully admit there are people out there who do the thing I don't want to do and make a lot more money. So I can't even honestly say that what mine is doing is like a better way and it's the way it should be approached. I'm just saying what I'm comfortable with and what makes sense in my mind. That's it. That's it. That's it. That's it. I know a lot of people do it a different way. I just like my way. And I guess if I were better at the way of trading that they are, maybe I like it better too, because obviously we're all here to like optimize the amount of money we make. But I just honestly, I guess I can't pull it off the way that they can. So I just do what I do, and I want to be honest about it. I show you guys when I make money. I show you guys when I lose money. Some payment periods are absolutely horrific, and I'm definitely net down when I consider all the fees and taxes and stuff. And then other ones like this past one is awesome. 18K, just like that. 18K, just like that. What are your thoughts on TXSE? I think it's actually going to be massively successful down there in Texas. Apex, yeah, Apex pays their promoters. I mean, I have an affiliate deal, but that's, I don't know. Like, does anyone really even have issue? Like, is it bad to be an affiliate? I guess in my mind, if I watch a lot of content myself, like on Rumble, on YouTube, on Twitch, on Kick, on Twitter, like I take in a bunch of content. If there's a person who has a platform, I would be more than happy to give them a cut rather than the company keeping the whole thing. If the content creator that I learned about it from is the only reason I know about it, yeah, I want to support that content creator. Because like if I'm buying something, let's say I'm buying like a brand new cup. Let's just say I'm in the market for a new coffee cup, and I heard about it on some content creator show. Well, the two options, no matter what, I'm spending the same amount of money. And generally with the content creator, I'm getting some form of discount, but whatever. The same amount of money is out from my pocket. Yeah, I would prefer that the content creator gets a cut rather than the all of it going exactly to the company. That's my mindset. I mean, of course, I would appreciate it if you guys use my code. But if you don't want to, because I don't know, if you have moral qualms with it, okay. It is what it is. I can't make you. I'm as much as I want to come to your place and just force you to do it, it's not going to happen. It's not going to happen. So whenever you guys do use my codes and whatnot, I truly, truly appreciate it. It's what allows me to keep making the show and paying producers and buying data and building strategies, this, that, the other thing. But I just want to say thank you, I guess. I don't know. All right. When is this? Have they all traded? They did. Okay. All 20 have traded, which means I need to this. Okay. What you're about to see is the hardest part of Apex. When you are done, when you have made your little bit of money, you're about to witness the biggest tactic to being successful on Apex or any form of prop trading, whichever one you choose to use. When you make your little bit of money, it's having the discipline to close the program the fuck out. What you just saw is worth thousands and thousands and thousands of dollars. Feel free to cut that. Feel free to rewatch it. It is the discipline to close the fuck out of the program. I'm telling you, when I had issues on this at the beginning, and I was like, dude, what am I doing? Why? I'm just down. I went down at one point, probably like 5-10 grand, something like that. It was just over trading. It is literally over trading because futures are absurdly leveraged. So for example, ES is the S&P 500 on the futures market. You can see it's trading at 5,337.5 or 38. It goes up in quarter increments, like 0.25, 0.5, 0.75, and then the next whole number. Every full dollar, so 4 ticks, so from 0.25 up to the next dollar. So if it goes from 3.6 to 3.7, that 1 point is worth $50. It's absurdly leveraged. If you look at the NASDAQ, right here, you can see it's at 19,015. If it goes from 15 to 16, once again, it goes 0.25, 0.5, 0.75. If it goes up a full dollar, that's $20. It's not just $1, it's 20. Futures are very, very, very levered, very levered. So that's good and bad. Obviously, it means if you're on the right side of a trade, you can make a lot of money. If you're on the wrong side of a trade, you can quickly lose a lot of money. But the issue, or I would say a personal issue for me, is in the morning, I would get up, I would trade. I'd make $200 and it's 9:31. And I'd be like, oh, fuck. Okay, well, that was easy. I should do it again. And then I would do it again. I'd make another 200. Now I'm up 400 on the day. I look down at the time. It is now 9:35. I'm like, oh, sick. That was easy. I should do it again because we're only 5 minutes into the day. And I would do it again. And I would make now another 200. I'd make 600. And the issue with this is you keep doing it until you blow out. So what I just showed you of you make your money, whatever your plan is, you're like, you know what? I'm going to trade one time today. I'm going for $200, whatever your plan is. Maybe your plan is to trade 2 times and go for $150 each. Maybe it's to trade 2 times and go for 50 and whatever your trading plan is, what I showed you, just closing out of the program, as soon as that's hit, that will make you thousands of dollars. Thousands and thousands of dollars to stick to your plan. Money can be made very rapidly in futures, and unfortunately, that means it could also be rapidly lost. So as soon as you make your money, why take the risk? There's another day. Just come back. You have to trade for 10 days anyway to get your payout. So just come back. The discipline to close out the program when all your trades and whatnot have hit, that's what you got to do. Right there. That was the biggest changing moment for me. What you saw, the difference between December, January, February, and then it jumped up in March. You guys could probably actually see it on the streams. Is Tesla crashed? Dude, Tesla's cratering. What happened? What in the world's going on? Is there news on Tesla? GME is pretty much flat. Let's look at Tesla. Tesla's getting murked. Oh, wow. Calls are being sold. Pots are being put. It cracked this put wall at 170. Wow. It is getting unloaded. It is. You literally read it today. What would that have to do with Tesla? That was the ban from X. That they're completely different companies. Completely different companies. What would the ban on X have to do with it? That makes no sense. Tesla's getting destroyed. Well, if it closes today below this low, 170, 167.75, I would then be looking for 157. And then there's also this downside gap fill to 147.26. Eventually that will get filled up. So I think that would be a reasonable target. Elon said if Apple integrate ChatGPT, he would be banning iPhones at Tesla plants. But would that really have a 3% drop on a multi? It's not like Tesla employees are a large revenue source for Apple. That I think it has a lot more. Doesn't he have his payment plan, whatever? Isn't that going to be like adjudicated upon or whatever tomorrow? If I had to guess, not knowing, I'm like literally just firing from the hip here. I would think that it has a lot more to do with his payment package. Tesla is back under 170. Voting no to Elon's 2018 comp package is pure robbery. I think I would assume it's the payment package of what's going on.
David, is Elon Musk worth $50 billion?
I mean, I think he is, because if he leaves the company, I think they're in bad shape. I think he's critical to that company continuing to innovate and doing new things, like the Optimus project on robotics, like new versions of Tesla. I mean, there's still a lot of innovation left at that company, and he's absolutely instrumental to that. But look, again, I would go back to what the shareholders said in 2018. 73% of them said that if you can hit these targets, great. You get rich, we get rich. Make us rich. We are happy. This is a win-win type deal. And that's why they approved it. And I don't think the judge ever should have avoided it. And I think a lot of shareholders will vote for this out of basic fairness.
I think they will too.
They understand that this was a fair deal when it was first approved, and they don't think the judge should have gotten involved in this activist way and voided it.
David, is Elon Musk worth $50 billion?
I mean, I think he is, because if you leave.
What do you guys think on that? Do you think he should be paid? Do you think? So for those of you who maybe don't know, what happened was way back when, I believe it was 2018, Elon had an absurd pay package if he hit extraordinary goals. As in, he basically got nothing unless he took Tesla as a company and Tesla stock to the moon. And he did. He took the stock and the company to the moon, and he got a very lucrative deal. So he got paid whatever, 50 billion, but he made the company worth whatever, trillion. Like the market cap of the company exploded. And now, in retrospect, after it was already agreed upon and everything, years later, they're like, oh, actually, we can't do that pay package. And it wasn't like the company, it was actually a judge. It was the judge in Delaware that was like, actually, it's just too much money. So a contract's a contract. It was agreed upon. The contract wasn't made in duress. It wasn't made with hidden information. As David Sachs said, it was a win-win. He only got a large amount of money, a lot of money, obviously 50 billion, a huge amount of money, if everyone else won. So all the shareholders won. They all benefited off of it because they were shareholders and the stock went up. I don't know why this is becoming an issue now. The contract is void. There is no contract. Well, the judge voided it, but there was a contract. Exactly. That was the deal. Who is the judge to decide to kill it? He made a ton of people a ton of money. Yeah. I don't know how they can now just say it's unfair. The judge's argument was basically he got paid too much. If you go into the case, like the judge's reasoning, the argument is no one else has been paid this much ever in corporate America. So we can't do it. But to me, that is literally anti-free market. I don't understand it. I don't understand it at all. It is a literal free market problem. And that's exactly why he's moving the company to Texas, like reincorporating it or whatever, because he doesn't want to be in Delaware because of that judge, which I don't blame him. So market's picking up a little bit. The Qs are picking up a bit better. The Qs are actually nicely picking up. There's a hedge wall closing price. As I said, Ooh, all right, there's this one. Are we starting to turn around? Maybe a little bit, maybe a lot of it. If there's a bid, if the bulls step into the market, I really like the idea of yesterday's closing price, 5,361 on SPX. If you're looking on the SPY, that would roughly be 535.65, 535.65. If you're looking on the Qs, that's actually a little bit closer, 464.81. So those are, I don't know, some of the things that I'm considering on this beautiful day. GME, the old U-shape reversal. Okay, what do I want to do today? What do I want to do? All right, slap it in my trade. If you are in the Discord, I'll post it as soon as I could take this freaking screenshot. Okay, downloads, downloads there. All right, if you are in the Discord, I'm putting in my trade right now. All right. My trade is in there. Piper has not fired quite yet. I'm front running Piper, which generally when I do that, I get in trouble. But Piper has not fired yet. As soon as it does, I will post that as well. Let's see. No, it's actually not even that close. I guess too much pre-market negative movement. Oh, why did I do that? Maybe I shouldn't have front run it. Generally, sometimes I get lucky when I front run Piper and then I quickly get it out of my memory. And then days later, I'm like, oh, I should front run it again. But every so often, I just get absolutely demolished when I try to front run it. And it is, it does not end well for me. It does not end well. But I do see some options picking up in the SPY here. Which one was this? This is Tesla. Tesla getting murked. Actually bouncing a little bit right now, starting at 10. A little bit of bullishness came in. For those of you who are curious about GME, it dropped, then it went flat, and then ever since 10, it's picked up slightly. So here's what's going on with the calls and puts in real time on GME. For any of you who are curious what this is called Spot Gamma. It's in the description of the video. I get that question 10 times a day. The service is called Spot Gamma. Spot Gamma, there is no better tool to monitor what's happening in the options market. I've used them all. I paid for them all. I'm telling you this, you will find no better tool. This is, it feels like when you sit down and use Spot Gamma, it's like an F1 fighter pilot. There's a ton you could do. And then here's, I would love for the SPY to get popping. GME, big wick there. Almost got a new intraday high. Let's set up an alert just in, I don't want to miss a breakout for all my degenerate meme stock traders in here. I need this thing to go back up to like 55, man. What are we doing? The volatility really just slowed down right there. Like really slowed down. What are we doing? What's the play today? What is the play? Amazon. I should check in on Amazon. I am swinging in Amazon call position right now. Was looking good, then got smashed. Would love for this to recover. And then we'll bring up. Cool. All right, we did that. Like I said, you guys know my plan. You know what I'm going for. Trying to do it in real time. Okay, yeah, no problem. I will. Here, I'll pin the Apex thing to the top of chat. That thing where I'm using someone else's money. I'm pinning it to chat right now. Like I said, the current test is about $17 if you're interested in it. It's going to take time, but I like it. Are the rules easy? No. Is passing the test and getting it? No, it's not easy. But think about it in terms of risk to reward. When you're trading like your own options account, $17 is probably nothing to it. You're probably up or down a couple hundred, couple thousand. So I like the risk reward of it where even in the worst case scenario, if you completely blow out, you're down $17. So I just like it. It kind of keeps me from being like a hardcore degenerate because I'm still a hardcore degenerate while trading, but then the downfall is just the cost of the test. So I don't know. Makes sense in my mind. What's this about NVAX? NVAX sets to receive grants from the forthcoming bipartisan vaccine funding bill, emphasizing enhanced public health measures. NVAX. NVAX. I hate playing pharmaceuticals. I just have no knowledge of the industry. Biotech, pharmaceuticals, medical supplies, that whole world, it's speaking gibberish to me, folks. Gibberish. Doesn't look like, I mean, it's up today. It had a good push, got smacked, came into the, it's interesting, I guess, to look at. Looks like it had a good earnings, but you're now kind of chasing. I guess if it starts to pop like above 18, you could just use the recent low. So like you have some risk and control, but overall, I just hate biotech. I hate pharmaceuticals. I like trade where you have an edge. Trade where you have an edge. Done myth. Why are you so pissy about Apex? 17 PA account fee. Well, it depends the account you're on, but that's 85. So now what? You're in the hole $100. Are you just mad because you can't trade on it? It's really strange to me when people call a whole service bad because they're bad at it. Like that, the service isn't bad just because you can't pull it off. That's a huge difference. It would be very, very, very problematic if no one was getting money and if they were lying about things. But what have they lied about? I showed you that I make money. Like, just saying it's more than 17. No, the test is 17. I'm telling you, the test is $17. What in that statement is wrong? The test is $17 because it is $17. I got approved 2,000 requests on Apex and it shows I lost 1,500 because of it. I made 500. Does that mean that your daily drawdown is now 1,500? No, when you do a request, you just can't, whatever your account is, I assume you have a 50K account. They took 2K out because you were approved. You made 500, so that's why it's a loss of 1,500. But no, your drawdown is just a 50K. The PA account costs more. Yeah, when you pass the test. But once again, that's all there. That's not hidden at all. It's not like you pay the PA fee if you fail the test. The next test you take is another $17. Done myth. You just sound pissy about it. And I mean, I've seen this before, and I think it's probably just because you can't do it. But just because you can't do something doesn't mean it's like a scam. I literally just showed you that I've made, what was it, 84,000 this year, 86,000 in total. That's what it is. So just chill. Why don't you, like, I don't know, either GME's going. I don't know, like you just have to figure out a better system or just not do it. No one's forcing you to do it. It's not like a rule. I like to inform. Yeah, but you're informing incorrectly. What you're saying is false. You're saying like it's a scam. You've said that. I watched you say it, and it's not a scam. It's a particular setup that you don't like, and that's fine. We're all like entitled to our own thing, but just because it's something that you suck at doesn't mean it's a scam. Myth needs a Snickers. It sounds like it. Sounds like he's just pissed off that he lost $17 on a test, and he's like, ugh, must be bullshit. Must be bullshit. Yeah, we all figure them out. Yeah, you guys saw me. It took me months. And I'm hoping that me doing it makes someone else's learning process a little bit better. But you've seen me on the program since like October, November. It took like, I started it in like October, November, started taking it a little bit more seriously in December, very seriously in January. And even in that time frame, I didn't find my stride until March. It just takes time. It's not, I by no means would I say it's easy. It's not easy, but it also, I mean, I actually really, really enjoy it by the fact that I think people lose less money. I think the average person loses a lot more money trading their own account, whether on futures, options, or stock, or crypto, than these SIM funded, because the SIM funded, your fall down is your cost fee, which, I mean, I think you just lose. So if the name of the game is to have more money to your name, that's why I'm such a big fan of it. GME's cruising. I'm trying to not watch it because it feels like kind of ignoring it is like allowing it to really rip here. I would be over the fucking moon if this thing could get to like 45 today or 50. Dude, if it got halted, halt. Question 3. Do you think Ryan Cohen and his crew are popping champagne and shooting money all over the boardroom and will make it rain? I mean, from how much money they were able to raise at the GME offering is done. Okay. So we've seen this in 2021 and 2022. When they announced that the at the market offering is happening, the stock goes down because it's a literal dilution. They're adding more stock. They're selling it to the market. It's literal selling pressure. And then on the announcement that it's over, it goes up. So they just announced that the GameStop offering, the dilution is done. So now that selling pressure is out of the way and thus it pops. Now, hopefully this is enough that it puts pressure on some of the shorts. Maybe people get into calls, like they FOMO into calls. Maybe people, I don't know. Well, a myriad of things could happen, but hopefully this has some legs. No pants Tuesday in the office. I wouldn't suggest that. Going pantsless in a corporate office, it's a high risk, low reward situation. Now it's low reward. There's still a reward, but it's low reward. So just be careful. What price do they get? It's called an at the market offering because you sell it whatever the current market's price is. GME just halted. I know. That's why I said GME halted. Is it required to trade every day on each account? Nope. You just have to trade for 10 days to get a payout. And they don't have to be consecutive or anything like that. But one of the rules is paid 10 days. And of course, this is happening when Charles Schwab is down, TOS is down. What, dude? What? That sucks. Is TOS still down? That sucks, dude. I feel bad for you. I feel so bad. Oh, that is brutal. So let me get this straight, Jimmy. All right. So let me get this straight. Jimmy pops into us. Users can't do anything because of technical issues. That sucks, man. That sucks. Oh, did Apple just hit a record high? Apple. Did it really pop there? Oh, wow, it did. Apple, all-time high. We're missing it. GME's moving. Now it's halted. Apple hit an all-time high, and their market was recovering decently. I guess it's stalled out a little bit. Crazy times. Apex has a few potential changes coming up, like faster payouts and everyday request reviews and higher consistent reviews. Yeah, so they have that. The one I don't like is this whole idea of putting people on probation. I don't like that at all. I think the rule should always... I think the rule should be consistent perpetually for everyone. This idea of putting people on probation seems really, really silly to me. If I buy the Discord, am I in right away? You'll be in today. I can manually update. Generally, I think the database normally updates at noon, but if you want to be in like an hour early, I could randomly update it for you. But within the day, within 24 hours, if you verify your email. All right. Let's switch up. I should retype. All right, let's get this one we need. All right, good. Probation is for first-time windfall traders to stop scammers. Oh, I thought it was for other things as well. Did I get out of coin? Unfortunately not. When I should have gotten out, I was on the flight and I just missed my exit and I was being a little bit greedy, and I don't want to think about it. It makes me want to drink a lot of nooners. Did you end up checking out the Live Golf Tourney in Houston? I did. So to be fair and transparent and just honest with all of you guys, I don't really know much about golf. I went to Top Golf while I was there and it was horrible. It was actually more often that I completely missed the ball than when I actually hit the ball, which is a bummer because I'm in the world of finance. Some people would say I'm in the high end world of Wall Street, and that's like obviously golf, very popular. So I should learn. I just have never golfed and I don't know. Interesting how AMC follows GME most often. Is it? I don't think we've seen that correlation for like ever. They just are both thought to be meme trades. And I mean, AMC is just a wannabe. GME and Roaring Kitty are the original thing. Like the sequel, the duplicate is really never as good. And that's exactly why GME historically in 2021 had an all-time high, depending if you count pre or post-market, but let's just call it $500. So on a stock split adjusted basis, that means GME traded at 500 at, if you're one, we're rounding here, but just think 500 roughly. Anyway, when you consider GME on a stock adjusted basis, that means it would have to get to 125 right now. So it's at 25, but then that's a big drop for sure from its all-time high. It's it's huge. It's a huge drop. But AMC's drop is much more catastrophic. Like AMC is literally down like 99%. I call the high noons nooners too. Are we friends? Oh, of course. Anyone who calls high noons nooners, we're friends. We are 100% friends. It's interesting that when AMC doesn't issue a dilution, but GME does, but AMC still drops. No, it's not. They're traded as a pair. Like there's a lot of pair trading in this going on right now. Matt, I only have $10 right now, so I can only buy way out of the money calls on AMC. That's a waste of $10. I don't care if you call it raising funds. They literally back their short sellers and give them a discount shares and basically screw everyone that holds them. Wait, what? They do? What? How is doing an at the market offering backing their short sellers? What does that even mean? To become a short seller, you sell stock, and at the market offering requires someone to buy stock. Not only are you like a little off on this, you're saying actually literally the complete opposite thing. When you do an at the market offering, aka raising funds, whatever you want to call it, dilution, Bang, Citi, B. Riley, someone like that, they're selling stock to the market. Someone has to buy it. There's a new owner. To become a short, you have to sell stock. You have to go take stock on loan from someone and then sell it to the market. No name guy, I think you're getting some of your wires crossed somewhere. Like you're literally on the opposite side. Matt, how high do you think the squeeze will go? I think price projection is as like retarded as people could possibly get. Like I really, really do. The concept of throwing out a price is so idiotic. I've lived through this squeeze, this meme mania for years now. All you can do, the best way to take advantage of the situation is stay in the play as long as you think the trend is intact. If you think the trend's over, take your money and move on and go to the next thing. The idea of a price target, okay, there's 3 scenarios that a price target could work out. Scenario number 1, let's say you have price target X. It goes all the way up to X, you take your money, and then what if it goes 5 times X? You just lost out big. Scenario number 2, you have a price target X. It goes up to almost X. It's off by 25 cents so you don't take your money and it comes all the way down and crashes. So you were in the run up and you had to suffer and you make no money, even though you're almost right there. Scenario number 3. So scenario number 1 is your price target is way too low. Scenario number 2 is your price target is way too high. Scenario number 3, or not even way too low or high, even if it's a little low, a little high, you missed out. Scenario number 3 is by some miracle, the number you pick was right. And you just nail it spot on. Most likely you're not going to be in group number 3. So why not just make your life incredibly easy and just ride the trend as long as the trend is there? Like, you don't have to overthink it. If it's going up, stay in the play. If it starts going down, get the fuck out of the play. You could always re-enter. This idea of like picking a number, it's so dumb. It is so dumb. The trend is your friend. If the trend is up, stay in. If the trend turns from up to down, get out and move on with your life. You don't have to overcomplicate this. So many people are attempting to make this fucking rocket science of math. It's not that at all. It is not that whatsoever. No wires crossed. Selling a bunch of shares randomly is great for a company, but basically printing free money at the cost of anyone holding them. What does that have to do with short sellers? It's raising money for the company. Yes, it's dilution, but what you're saying it somehow is backing shorts. How does that back shorts? I mean, we're seeing a real-time example of when the at-the-market offering is done, it goes up, i.e. hurting shorts. They are providing shares for shorts to cover. There's no issue with them being able to cover. It's highly liquid. Look at the volume. They're providing shares for shorts to cover with may not have been available to close their position. What? Do you see the volume that is trading per day on the open market? This is where people just start to make up bullshit or don't know enough about the market, providing shares for shorts to cover. What are you guys fucking smoking right now? This is literally basic math. Right now, it is estimated that give or take whatever percentage for risk or like for error, as of market close, it is estimated that there's 62 million shares of short interest. 62 million shares, okay? So keep that number in mind. 62 million. Let's add volume. Yesterday, it traded double that, 131 million. The day before that, it traded 279 million. The day before that, it traded 206. The day before that, it traded 73. You have to go back to June 4th to find the first day that was slightly below it, 51 million. There's no issue finding shares, folks. This is a very, very liquid equity. This is being literally in one day, all of these shorts, if they wanted to, could get out. There is enough action and liquidity in trading for that to happen. So this idea of them diluting is providing shares for the shorts to finally get out. That's just a deep misunderstanding of basic math and market structure. That there's so much shit that just starts to go on when things get like this chaotic, and it blows my mind. More shares equals more dilution. No, the more shares, it just is the dilution. Why would anyone apply pressure to them when the company just makes plenty of new ones available whilst diluting? The pressure doesn't come from the amount of shares, you fucking ding dong. It comes from the price. If you're a short on a stock at $10 and the stock is currently trading at $20, you're just down $10. It doesn't matter if the outstanding share count is 1 million, 100 million, 1 billion shares. You're down $10. It literally has nothing to do with the amount of shares. The pressure comes from how much you're underwater. That's the pressure. You could argue that, there are some nuanced arguments to this, that when the share count is less, it can move more rapidly. But once again, the pressure is from how much you're underwater. So if you're interested in a squeeze, it's better to be a low float because it can move more rapidly. You have less baggage to carry with you. That's true. But that's not pressure. That's not pressure at all. Apple, another new all-time high. Apple's going. Don't get so upset. We're here to learn from the master. I'm definitely not a master, but I guess I'm not upset. It's just so many people like to spread bullshit. So many people like what did we find on Twitter the other day? That GME now has more short interest than it did in 2021. Once again, a straight up lie. People calling limit up, limit downs manipulation. A straight up lie. You have to get out actual information. Actual information. Like they've tried to destroy rum and DJT, but there are so many retail owners of DJT and long-term holders, they've struggled. What? Both of those have about 10% short interest. He is correct. Matt is wrong or misleading. Yeah, I'm the wrong or misleading one. That's a possibility. That's 100% possibility that maybe the guy who's been in this world for years has done countless interviews with actual market structure experts. Maybe I'm the wrong one. Maybe the guy who could show you the evidence of it, talk about the basic math and the meaning of these words. Maybe. They have short interest because people hold those. What? They have low short interest because people hold those. What the fuck does that mean? You think... What does that mean? They have low short interest because people hold those. All stock is forever hold. There's always an owner. All that happens is who is the owner. Like literally all stock is owned. Every single share. It's not like some share is sitting in the ether somewhere and like it doesn't have claimed ownership. What does that even mean? Because people hold all stock. Literally all shares are always owned. It's just who's owning it. What? Oh my God, dude. You know that, right? Like, you know, it's not just like out there in the ether and like maybe someone's going to buy it. Like literally a prerequisite for someone to go short is for them to get the loan from someone who owns it. If people are long-term holders, why would anyone try to short a company with high demand and people less willing to part for lower prices? Because they think the company's worth less? Why do people hold? Why are people bullish? Because they think the company is worth more. It's the same thing. It's literally the same thing. Some people have an opinion that something's overvalued. Some people have an opinion that something is undervalued. And then you can express that opinion in the market. If you guys are, okay, if you want to put on your tinfoil hat of like, this is fucking manipulation, this is something that's crazy, you're not going to find it in the short interest. The short interest numbers are going to be pretty much accurate. And I'm saying pretty much because there is a 2-week delay for us to get them. If you're looking at volume or shit like whatever this is of like who owns the videos, this, that, the other thing. Okay, if you're looking for real like evidence of like, oh, something is potentially corrupt going on, like where you would have an actual case where someone who's knowledgeable like would listen to you and be like, okay, that's interesting. You have to look at the FTDs, the fails to deliver, the spikes in the fails to deliver. That is the interesting thing. That is where something truly within market structure broke down and something happened that shouldn't have happened. That is like, if you want to look for something, that's where you look. You look at the FTDs. If you want to look at something else, you look at the relationships between brokerages and market makers and payment for order flow. You look at brokerages not letting people log in, not trading. That's where you got to look. I would never, ever sit here and say, hey, the market is completely top tier, all good, nothing ever crazy happens. No. I think crazy stuff happens every single day. I think illegal things happen, everything. I think morally gray area things happen, everything. I think there's a lot of corruption on a daily, if not minute basis happening within Wall Street. My argument is just look in the right place. If you're looking in the wrong place, that's how these nefarious actors continue, because as you're looking over here at this thing and all regulators and true professionals know that's a nothing burger, it devalues your argument. So you have to look where you actually have a quality argument of trying to get some sort of like realistic reform. A short squeeze can't occur if a company releases millions of cheap shares. If they continually dilute, yeah, because there's the selling pressure. So a company like AMC, they're basically, it's very close to impossible for AMC to squeeze because the retail owners gave the board, Adam Aaron, the ability for unlimited dilution. They also happen to have about $4.5 billion worth of debt. So anytime the stock goes up at a higher value, they can raise more money off of that. So the selling pressure is coming from the company itself. GameStop is in a slightly different situation because they have a bunch of cash. They actually have they raised $4 or $5 billion, something like that. So it's just a different situation. The fundamentals is going to force the board to always dilute. GME, the argument is not the same. Did GME not do more or less than that? No, not at all. Look at the amount of dilution. Look at their cash situation. The fact that you don't know that, but then you think you are like properly understanding to like an extreme degree market structure tells you something. It's just a short squeeze can occur if a company releases millions. Once again, I can agree with Normandy, but not you, because you said it backs up short sellers. It has nothing to do with backing up short sellers. Normandy is right because it's basic supply and demand of you like jacked up supply. You said something stupid like you're backing up the short sellers. That doesn't make sense. All of these are trading at a huge amount. It's not a liquidity problem. It's literally a basic supply and demand issue. You said nothing about your diluting supply, and that's the reason. You said it says something to do with like giving the shorts an opportunity to get out. So just because you and I have the same conclusion, you could have a math problem and I could do the math right and we could get to the right answer, and you could do it wrong and you could just guess the right answer. Very different. How is my play doing? All right, my play on the day. Realize on the account today is down $23 because of fees. I'm in 10 credit spreads on SPX. Currently up $700. Should I take it or let it ride? Take it or let it ride? Maybe you don't like the short part, but the dilution is 100% of part of what I'm saying from the start. It's not that I don't like the short part. It's just that it's wrong. It's just factually wrong. Like you could be like Rudder and say Texas Roadhouse ribs aren't good. Once again, it's just factually wrong. So it's not like an emotional response out of me. It's just I have an appreciation for accuracy and truth. So when you say it allows the shorts to get out, that's factually wrong. Rudder saying that Texas Roadhouse ribs aren't the best ribs, it's factually wrong. Like there's certain things in this world that are not opinionated. We can measure it. There's the Socratic method behind it. So when we put this to a test of logic, we all inherently know that Texas Roadhouse ribs are the best ribs on the entire planet and potentially within the entire galaxy. That's a measurable fact of our reality, not opinionated. I think that maybe using a rib analogy makes more sense on this one. Well, 99% of cows don't like ribs. I mean, whatever. If you guys don't want the truth, you don't have to watch the show. If you don't want to learn about ribs and the best ribs and why all other ribs are good but not the real thing, help me understand all of the fail to deliver. Okay. You guys want to learn about fail to deliver? This is what you need to know about fail to deliver. All right. So picture this. Nothing. A bunch of nothingness. All right. Now, what you have to do is picture this. Picture a circle. And in the middle of that circle, it's the DTCC, the Depository Trust Clearing Corp. This is the market structure of where all the brokerages meet at the end of the day, and they say, okay, who owns what? All of the users on my brokerage, we were net buyers of Apple, so we need to go buy Apple. We were net sellers of whatever, Norwegian Cruise Lines. So what happens is all these brokerages at the end of the day meet up. They have a super secret meeting, and they all meet at the DTCC, and stock goes one way. They're like, okay, we got to send Apple to this guy, but this guy needs to send us cash because they were net sellers of this stock. It's the settlement. So all the brokers come meet around the DTCC, and they see the net settlement. Are they net buyers of this stock, net sellers of this stock? And sometimes in this system, most of the time it's good. So let's say out of all of your users, because remember, it's your client as a whole, because a lot of people don't know this unless you're using ComputerShare. You're not the owner of stock or anything, the brokerages. So say all the users on what's the one that's down today, TOS. When you buy on TOS, legally, you have a fancy schmancy IOU from Charles Schwab. But Charles Schwab is the actual owner of the stock. So the actual owner, these brokerages, they come to the DTCC, and at the end of the day, they say, okay, because of all my users' actions, we're net buyers of this, we're net sellers of this. So stock goes to one brokerage, cash goes to another brokerage, and that's how it normally happens. And that's the whole settlement cycle of like, how long does this system take? And right now, we just went from T2 to T1, so it's a one-day settlement. Now, a fail to deliver is when this system fucks up. All of a sudden, you have brokerage whatever saying, hey man, I need GME. I'm a net buyer of GME. You're a net seller of GME. So the stock should go one way, and the stock ownership goes one way. Literally, from a legal standpoint, the other brokerage becomes the owner, and then the cash goes to the other brokerage. And with an FTD, a fail to deliver is when that fucks up. So when the money's not there, when the stock's not there. So for whatever, any mess up in this system is referred to as a fail to deliver. Now there's various types of fail to delivers. One type that gets a bunch of interest and a lot of people talk about is naked shorting. So naked shorting is when you allow clients at one brokerage to sell stock, but they don't have the stock to sell. They didn't properly get a loan. So the stock goes one way because they sold it to someone. So there's a new owner of stock up here. There's a new owner of stock, but they didn't actually have the stock. So the money went the right way, but there's no stock to be delivered, i.e. a fail to deliver. Because if you sell stock that you don't own, you sold something that's not there. It's Fugazi. It's fucking FUBAR. It's as real as my girlfriend, man. So they think they have it, and then that's the literal fail to deliver. It didn't go to the new guy, and that's one type of fail to deliver. It's not all types. There are other types of fails to deliver, but in this world of all like GME and whatnot, people talk about naked shorting. Naked shorting actually isn't. I looked this up once. Actually, I was talking with Dave Lauer about it. The most common type of fail to deliver, I think it's something like either like big banks or big insurance companies and something with like ETFs or some shit like that. I don't know. It was confusing. It was boring. It was like a large scale thing. So naked shorting, unfortunately, when you get, and we can get these reports. So if check this out, DJT had a lot. It just got off the fail to deliver or the threshold list. So there is a list where you can see who has a bunch of FTDs. Fails to deliver. But unfortunately, the reporting doesn't tell us the type of FTD or how it was prompted or even actually how it was resolved. So so the most recent report we have on DJT is from February 28th. We don't have any of this information. That's how slow these are to come out. So the last reading was 19.5. Just so you know, it wouldn't be cumulative. Just like at the end of the day when you have a stock price, it's not like you add the previous closing prices together. It's just where the current value is at. So you never add FTDs together. It's just on that day, what was the cumulative amount? And it gives you that. So hang on, GME shorts. Trying to bring theirs up. We'll see where theirs is at. But there's two big issues with this FTD reporting system. Number one, it's absurdly slow. So the most recent numbers we have for GME is May 14th. Folks, that was a month ago. The most recent reading we have, it's very, very slow. It's a very, very slow reporting system. And with that, fails to deliver 344,000. We have no idea who prompted it, how it was prompted, or how it was resolved, if it was resolved at all. All the information we get publicly is just the magnitude. Once again, we don't know who prompted it, how they prompted it, or how they resolved it. And on top of that, it's absurdly slow. So if you wanted to know the FTDs from yesterday on GME, you would have no clue. That information is not public information. The only people that know it is the DTCC. So it's a huge pain in the ass. It's like comically bad. But in terms of my larger point here, those are the types of things that you're like, oh, okay, that is where the retail trading public has a legitimate argument, a legitimate gripe. We are on the side of truth. But then when you see other people like, look at this short volume, they just don't even know what short volume means. So there's a lot. This might come as a surprise to you, but I'm a prickly motherfucker. I make a lot of people very, very angry. I don't have the best bedside manner. If you believe my high school vice principal, I'm a dick. I don't know. It's just sometimes this is how it goes. I don't like tribalism. And there are certain aspects of this meme community where they grab onto a concept, and if you don't agree with that one thing, they think you're an outsider. They don't think you're there for the general cause of it. And I think that's silly. We see that in politics all the time of you might be right-leaning, you might be left-leaning. And if you're talking to a person, and if you don't agree with them on like one concept of it, you're not in the tribe. That, to me, that's very problematic. And when you can't have open discussions and all of a sudden people bash you, whether you don't believe with their political beliefs, their religious beliefs, their stock market beliefs, like you're an outsider to it. And in my opinion, that really rapidly takes you away from honing in on some truth of the matter. So even on this, if you don't agree with all these like bombastic accusations of like the squeeze and the market and Ken Griffin and Citadel, if you're like, no, some of it's accurate, I just don't agree with all of it, all of a sudden you're a fucking crazy person. And well, you're not a crazy person. They just attack you because they're fucking pussy keyboard warriors. And that's just what it is. It's just tribalism has never like ended well. Never ended well. And I don't think it will anytime soon. What are we doing on GME here? What are we doing on GME? We popping up again? Calls came in huge, flatlined when it halted, and then they sold calls. So calls got purchased up into that and then smashed. And a lot of them were for this Friday. That's this green line. The green line is the calls for this Friday. So sold that open, flat. On the announcement of completing at the market offering, it ripped, then it went flat. And then right after the halt, popped a little and then got smashed again, and now we're flat. The interesting thing to check is if GME were to pick up, it would most likely be associated with the notional delta really ripping on GME. And for those of you curious about the SPY, strong pop from 947 to 1005, looking decent there. Looking decent there. Oh, fuck, Piper did fire. Right, a little bit of a late entry today. A little bit of a late entry today. All right, Piper's in there. Wait, back to my trade. How much money am I up? If you're in the Discord, I'm up over 1K. I generally try to stop myself at 1K. All right, throwing in my order. I'm reaching a little bit. Fuck those sensitive little girls. You are not offensive at all. They're just on their period. Stop mans trading your pussy, you pussy men. Just so offensive. What is your opinion of GME having a significant move before Friday? This Friday? My opinion is 50-50. I either think it's going to have a large move, but also I think there's a 50% shot it doesn't have a large move. 50-50. You guys know how it goes. Dude, I swear to God, if coin doesn't come back, I need this at 262, not 242. Apple is ripping right now. How's Amazon doing? How's Amazon in the red? What are your thoughts on Bros, like Bang Bros? I thought they went out of business. I thought Browsers kind of took over from them. I don't really keep up on that drama. Check my voicemail. All right.
Hey, Matt, I am the biggest and most baddest, I don't think that's a word, person on the internet. So if nobody wants to pitch in to buy your coffee mug, I will personally go to every single person's home to make sure they click that link. I am the internet tough guy. You're the best, Matt.
I like that. We're growing the cult. Maybe we need our own tribe in here. Maybe my issue is I've been fighting against tribalism too much. Maybe that's the wrong way to look at it. Maybe what I need to do is just really lean into it. Like really, really, really lean into it. Could work. Crazy enough, it might just work. I'll leave the door. We starting a cult? What should the name of our cult be? Should we just worship Piper? The Piper cult? Just interpret all of her decisions as like cosmic wisdom? What is your merch link? I don't have one right now. But I do have a Discord, which you guys should all join. It's the best Discord ever. I just posted my trade. I kind of want to show it off, but I kind of don't. Cult name, Independent Together. The Pussy Pipers. Tribalism, where the money's at. All right, we could commit. I'm man enough to admit that sometimes I'm wrong, and maybe I was wrong on the fact that maybe I shouldn't be anti-cult. Maybe being pro-cult is actually the coolest thing to do. Remember when I told you guys this? Remember when I said, hey, my plan is to wait for there to be some bullishness and then play it back. Does anyone remember that? The Kohrs Cult Club, all spelled with K's. We might have some branding issues with that, but I don't think we should say anything's wrong in brainstorming. Matt's Meat Market. Matt's Meat Market. Where'd you get that? Got that at the Matt's Meat Market in the Kohrs Cult Club. These are all great ideas. This is a good brainstorming session. I like this. We're going. We're making money. Spy's picking up nicely. I really just want to see GME get more calls. You guys have more voicemails? More voicemails.
Yo, Matt, Rudder here. While I do love me some cinnamon butter rolls, I'm going to pass on them ribs, bro. Went in Charlottesville, Virginia, went to the Roadhouse. Ribs tasted like they were microwaved. Only gave them a chance because you talk about them so much. So when you find yourself back in Texas, specifically Houston, let me know and we'll get you some real barbecue. When you pull up to a joint that says barbecue, first you look for the smoke coming out of the top. If you see smoke, you drive around and try to find the wood pile. If you find wood pile and smoke, you go in, you'll enjoy the ribs. Thanks, buddy.
So when I was there, I went to a place called like Papa's Barbecue, like a legit barbecue joint, and it was good. I would never say anything negative about it, but I'm just saying maybe go to one. I'm actually surprised. Charlotte, I should have been a big Texas Roadhouse. Just go to a different one. I'm not going to give up. He's trying to get you to give up. I'm not giving up on it. No way, no how. Dude, look at that V-shaped recovery. Houston, there's quite a few of us in Houston. I feel bad for you because Houston, at least over the weekend, was hot as balls, dude. Like, I was seeing people just melt. It was so fucking hot. so hot. So freaking hot. Can I have a look at KITT? KITT. Yeah, it looks like shit. What am I looking at with it? I mean, I don't think this even takes market knowledge to understand that this looks like shit. It's trading at 34 cents. Like, you don't need a Pico influencer's opinion on this one. I think we all know that it's dog shit. It's down 50% year to date, down 81% in 1 year. And from the time it started trading to now, it is down 96%. I don't think you really had to ask me that. Bros. This is a little bit more interesting. A little bit of a craziness, shoulder, head, shoulder, got rocked, but now it's kind of that U formation. It's putting in some higher lows and some higher highs. I like the trend. I mean, you can't chase it right here. You're basically getting in at a high. You wait for the next pullback and you like check to ensure that it's still putting in higher lows. So the next one, I would say, okay, it would be preferable to stay above 34 in the next pullback, but you very much need it to stay above 27. And then you wait for that. You want to get in when it's cheap. I wouldn't be a buyer here, though. I mean, why buy at a premium? That's silly. Why? That's silly. Okay, come on, GME, get going. How is my trade not executed? It's close. Just so everyone in the Discord knows, my order. Man. I'm just waiting. It's right there. Like, it's just, I guess it's like a liquidity problem, or I'm right at it. You guys should be hearing like that ding in a little bit if my play ever gets filled. I sold some premium. It's there. The Discord knows what's up. Did NVIDIA already do the split? Yeah, you'd hope so, because it's trading at $120 now, when it was literally just 1,200. Just wondering if halts are 5 minutes. How come it's been halted for like 45 minutes? No, some halts are 5 minutes. Some halts last for weeks. It depends on the there's types of halts. I've seen the SEC halt like pharma stocks and penny stocks literally for weeks, like multiple months. And then there's some that are 5 minutes. It depends on the type of halt and the reasoning for said halt. Circuit breaker halts themselves have different rules, like for example, sometimes if the SPY, like the actual S&P 500, halts too many times, sometimes it's just the market turns off for the rest of the day. That's a possibility. But when you're talking about it in the world of GME, it's a run-of-the-mill vanilla circuit breaker halt. It's going to be 5 minutes. Hey, I got it. Locked in. Locked it in. Locked in. Well, that was easy peasy. Not a bad day's worth of work. I've worked about 90 minutes now, and that was a cool 1.5K. Not a bad deal. Like I said, I still actually think it goes higher. I locked in because I was going for a specific like profit target on the day. But look at this bad mamma jamma. This bad mamma jamma. I think it actually does go higher. Would I enter here? No, because the risk is I got in here when it turned. I think a lot of people try to make this shit so fancy. Like they try to come up with like super advanced systems and algorithms, when in reality, most people are just trading off their fucking gut. And they're like, oh, I'm bullish today. I'm bearish today. My name's Matt, and I think stocks go up. No, like folks, I fucking beg. Just come up with a basic thing. A basic thing. If you're like, you know what? My strategy is to look at the 15-minute chart. And when I see a 3-bar valley setup, when it goes down and down and down and recovers, I go long and my risk is that low. You have defined risk, and maybe you have a certain profit target. Maybe you have, I don't know, a trend following system, just something basic, just a very, very basic run-of-the-mill system that protects your downside. Your trading will increase 100-fold. 100-fold. Basic. Keep it simple, stupid. Most people don't like this idea of just like, I feel bullish. It looks bullish. It looks bearish. What the fuck does that mean? I've been really, really addicted lately to watching YouTubers. I love this. Have you guys seen any of those like trading guru like expose videos? So there's people out there and what they do, and I love it. It's my favorite type of content right now. They sign up for people's like signals and like that, like their trading stuff. And they go into it and they take every single trade and they just kind of say, hey, I did it for 2 months and I lost money. And they have all the proof and they show how they edit their signals and blah, blah, blah. And then my newest favorite one is what the guy does is he goes in there and he buys it and he always reverses it. So no matter what the signal is, the guy's like, cool, got this signal, and does the exact opposite. And the guy's been making a killing off of it. It's so funny. I like it. I feel like I should do that. Just buy all these signals and just fade it and make money off these people who like clearly don't know what the fuck they're doing. It say today on his picture, what? And title of the shrimp, Polo Singcab? That's an interesting name. Matt, what would your technical good percentage once you know to take the profit once it goes in your way? I find it hard to target myself, and then I often turns red. It depends. There's no one perfect, like, this is the percentage I go for, this is the magnitude I go for, because that's one aspect of an overall system. So for example, if you have a mean reverting system, let's bring up the SPY and let's bring up Keltner. Okay, so this is is it gonna come up? There we go. Let me hide this for now. Okay, so what I just put on the chart is a Keltner system, and it just measures ATR, and then it goes standard deviations up at the ATR and standard deviations down. So this would be mean reverting. Let's say every single time you see it poke its head out of it, you do the opposite. You're like, nope, that's too much of a movement in too short of a time, so I'm going to be short. Mean reverting, you commonly go for a smaller profit, and you're right a lot more. You have much higher accuracy, but you have smaller profits. And then when you're wrong, you could get completely steamrolled. Another example of this would be on the exact same day. See how we dip below it? Maybe you buy here and then you play it back into the cloud. So that's mean reversion. It's a rubber band. It's basically saying, hey, it went out too much and I think it's going to come back in. So when you do that type of a setup, you might have a small profit and you're going for a high hit rate. But then another one might be something like yesterday where, okay, maybe for whatever reason your system was bullish, maybe at the morning you buy this breakout at 533 and you just ride it all day. Maybe you're like, nope, as soon as I get my signal, I ride it for the end of the day. And if you have a big runner of a day, you could have a massive profit. So that's trend following. Not always, but the generic, I guess, discussion around this is when you have mean reverting systems, your profit's a lot smaller, but you're right about general mean reverting systems have an accuracy in the realm of like 80%. On the flip side, if you have a trend following system, you're going to win a lot less, but when you do win, it's going to be a greater size. And the rule of thumb for a trend following system is to be in the world of accuracy around like 35-ish%. So you're only going to win 1 in 3 trades, but you're looking for that one winner to be enough to pay off all the smaller losers. So there's no perfect way. Like I know of systems that are little scalp systems and they have 98% accuracy, but when they lose big. I also know of some hedge funds, I believe in South America or maybe South Africa, that they're only right 10% of the time. 1 in 10 trades are right, but when that trade is right, it's a 20x return. So it's all possible. It's all 100. Like, there's no such thing as like, this is the way to do it. You just have to, like, my argument is, do you have a profitable system? And then the most common response to that is, well, I don't have a system. So as a trader, especially as a new trader, or even maybe if you're an experienced trader, but like shit's not going right for you, what is your system? You have to be able to explain your exact entry criteria and your exact exit criteria. If you're doing this shit on a whim, I promise you it's only a matter of time before you blow up your account. And that's coming from a person who's blown up many, many accounts. Mean reversions make the best trades. In your opinion, like, yes, you could be profitable, but you could be very profitable on trend following. I mean, it's all like nothing. It's not better or worse. It's just, what do you want to do? Or maybe you want to have a portfolio that does both. Maybe you want to have some trend following. Maybe you want to have some mean reversion, and you play it maybe in different sub accounts, and maybe you like the mixture of the two, maybe like a hybrid. Like, there's so many ways you could do it. And those are the two most popular, trend following and mean reversion. There's also arbitrage when things are mispriced. All the other major families of types of trading systems, they're far less popular. In the world of retail, your two focuses should be trend following and mean reversion. And I would not say one is better than the other. You can make money off of both of them. I have myself systems that are both of those systems, and they're both profitable. And sometimes ones are on hot streaks, other ones are on cold streaks. Just shit like that happens. I do want to say though, in my humble opinion, once again, just my opinion, take it with a grain of salt. Maybe I'm right, maybe I'm wrong. If you're doing something like Apex, I think scalp trades are the best. Just because of the way the rules, the unrealized drawdown works, trend following becomes really difficult, in my opinion. Or I guess if you do trend following, I would do trend following with a set profit target, not a system breakdown. And that just has to do with some nuances of how they measure your unrealized high. Just a little side note there. My biggest struggle is knowing when I'm trend following and knowing when you're chasing. Look, start tracking it. Get a trading journal. Write it down. Like, okay, let's say, I don't know if this fucking works. Let's say your system is you go long on the SPY when it crosses above the 48 EMA, like it just did right there, or you go short on the SPY if it crosses below the 48 EMA. Okay, so that's your entry signal. When it does thing X, you go long if it's crossing above, you go short if it's crossing below. The next thing, two things you have to define is your stop loss. Is it that bar's low? Is it the day's low? Is it an ATR? Is it trend following, as in like a stop loss? Like, and as it goes up, you're just always using the bar's previous low. Or when you enter, is it literally just best to hold it to the end of the day? Those are the things as a trader that you have to track. And those are the exact same things that we are literally discussing at nauseum in the Discord. If you think the Discord is some just like fucking, oh, I have a signal and you're just copying signals, I'm telling you, don't join the Discord. You are going to be very, very upset. The value of the Discord is these types of nerdy things of like, what is the best math? Like, for example, why was I so confident about this trade of when it dipped down, started to show some strength, and then I was targeting this upside level? It's because I know the odds of it. I know the odds of this level getting hit today because I'm a nerdy fucking coder. I have the data, so I wrote the code to backtest it to know what percentage of the time that actually happens. So if you're just saying, well, I have a system and it's off gut feel, like if you're just spot checking something like, oh, okay, well, I'm going to buy dips when it's green, or I'm going to buy this crossover because like you scroll back a couple days and it seems like it works. What the fuck? No, you have to have a larger data set. Oh, I just got pen on my MILF shirt. Fuck. Could this day get worse? Honestly. There is, like, I got a little pen mark. You guys won't be able to see it, but there's a little pen mark on my shirt right there. Fuck, dude. Wow, this day just turned really negative. We were having a good day. I don't think there's a piece of information that I could get right now that would make this day worse. I did do it to myself. Then that's the issue, is I can't even be mad at someone. I can literally only be mad at myself right now. I'm just Complete 180 on the day. I complete 180 on the day. I'm upset. Did you guys send in things to react to today? Maybe you guys send in funny things that will take my mind off of it. Where are we at? All right, what do we have here? Just in, Nancy Pelosi claims newly released footage of her taking responsibility for the epic security failure on Jan 6 is a revisionist history. Fact check. It is literally Pelosi on camera saying, I take responsibility.
The fact is that the President of the United States, the former president, and his toadies do not want to face the facts. They're trying to do revisionist history on January 6th. But we cannot let us be dragged into their, again, false impression of what happened that day. They know what happened that day. The fact is that we have responsibility, Terry. We did not have any accountability for what was going on there, and we should have. This is ridiculous. You're going to ask me in the middle of the thing when they've already breached the inaugural stuff?
Well, that's a little awkward for her. It's a little awkward for the goat of Wall Street.
I mean, the National Guard? Why weren't the National Guard there to begin with?
They thought that they had sufficient
That
resources.
is not a question of how they had been. They don't know. They clearly didn't know, and I take responsibility for not having them just prepare for more. We have responsibility.
That's a tough one. It's a tough break for her, the old gal. What was the info on this? Since Jan 6, 2021, Nancy Pelosi spent 3+ years and nearly $20 million creating a narrative to blame Donald Trump. New footage shows on January 6, Pelosi admitted, I take responsibility. Awkward. 3,000 years in the future, the History Channel finds your room.
My God. This civilization was far more advanced than any of our original notions. An empire dedicated to the arts, to the divine, but also to the sciences.
The researchers have uncovered a scroll, what may be a diploma of high academic achievement.
These people, the breadth of their study, they may have unlocked knowledge greater than we possibly could have imagined. Perhaps greater than the Library of Alexandria.
I believe we're looking at some sort of canned food or meat.
They had brilliant techniques of preservation. These people didn't waste a thing.
My God.
That was really good. That was really good. Even dogs can sense evil creeps. Not sure what's the political status of my dog, but she goes crazy at the end.
I don't know what kind of political status my dog is, right? There's Donald Trump. Do you see Donald Trump? Yeah.
Aw, puppy. A nooner. The old nooner. Nooner brother.
Okay. Now, we're gonna put, check this out. I'm not lying about this. I don't know what's wrong with my dog. I think I don't know what's wrong with her. Watch. We're gonna put Joe Biden. Joe. Here we go. Oh boy. Here, let's put a good video of him. Who is that? Who is that?
Welcome to the little wall.
I'm telling you, bro. Molly, relax. Relax. It's just Joe Biden. Wait up. She really doesn't like. She just saw him and she doesn't like him. Here we go. Joe Biden. Relax. She really doesn't like him. I don't know. I think my dog is a fucking Republican. Relax, Molly. Relax, Molly. Molly. Relax.
Oh.
He was at Twitter headquarters, and he said, we don't really need 3 different server farms. And the engineers say, well, yes, we do, because we need backups and we need caching or whatever. And he says, no. He decides they should get rid of the servers in Sacramento. Well, they say, fine, but that'll take 6 months. He said, no, you can do it in 6 weeks. And he's getting really dark, and they don't know how to deal with him, because this is like a month after he took over Twitter. And they're saying, well, no, I'm sorry, Elon, we can't do it. And he'd say, you can do it in 6 weeks. And by the end of the meeting, he said, you can do it in 6 days. He gets really dark, and he decides he's going to fire them. It's December 23rd. It's like 2 days before Christmas. He does fire them, but the next day, Christmas Eve, he's flying from San Francisco to Austin, Texas to go home for Christmas. He's with 2 young cousins on the plane who are engineers, and one of them says, why don't we just take those servers out ourselves? Elon Musk makes a U-turn in his airplane, tells the pilot to go to Sacramento, and they go to the server facility. The guard there is like flummoxed. It's Christmas Eve, and they're forcing their way in, and Musk turns to his bodyguard and says, do you have a pocket knife? The guy goes, yeah, and cuts the cable to the servers, and they got rid of that server farm in Sacramento. But it's why 80% of the people who worked at Twitter when he took it over are gone.
They weren't doing anything. I mean, I don't know. I think the guy's a G. What else? I think I found some stuff that I wanted to share with you. Oh, this one was wild. Check this out. Guys, listen up to this. Oh, fuck. What was that? Representative Robert Latta, however you say it, is a Republican from Ohio who filed another $50,000 buy of Farmers and Merchants Bank, FMAO. You've probably never heard of it because it's a small-time player, but it's particularly notable. FMAO is tiny with a market cap of only $275 million. He filed $185,000 of buys in the last 2 years. Farmers and Merchants Bank is headquartered in Archbold, Ohio. Archbold is just a couple of miles away from the district he represents. Suspicious nonetheless, but we'll keep an eye on it from there. Totally not trading on any insider information or anything like that. The district that he controls, there's the bank, small-time bank that no one's ever heard of. I'm sure there's no quid pro quo or anything like that going on. I'm sure if you ask me, it's probably all above board. Wouldn't look into that one at all. Trust me. What's the other one here? Representative Josh Gothenheimer. Oh, I got a spam call. That's rude. Representative Josh Gothenheimer just concludes trades up to $20 million of Microsoft calls along with many other trades. He's now traded $84 million worth of stocks and options this year. Folks, we're halfway through the year and the dude's traded $84 million. He sits on the House Subcommittee for Investor Protection. I love it. You can't make it up. You cannot make this craziness up, but yet it is our current government. I just thought this was funny. Roaring Kitty posted this himself. You were a billionaire. Where else? Was there something else I wanted to look at? Oh, I like this one. This is what I'm going to get into. How much I made today using tarot and intuition to day trade options. You probably didn't know that you could put that together, but you can. You can. After scanning the market from 8:30 to 9 and picking the stock I'll be trading the day today is Amazon, I do a single card pull to confirm my decision or get guidance. Today I pulled the Ace of Cups, which represents abundance. This gave me the needed assurance to trust in my strategy. So before, when I was saying you need a trading strategy, this is what I'm talking about. This is exactly what I'm talking about. By Amazon. Did she end up making money? Or he or they, or I don't want to be rude here. We're 21% return in 8 minutes by trusting my higher self. That's what we need. If someone wants to send me a deck of tarot cards, I'll start trading off of that. I don't even know where to get them. So either send them to me or just tell me where to buy them and I'll get tarot cards, and that's how I'm going to start trading. The month of July will be the month of tarot for me. I can feel my inner chakras becoming aligned, and I will trade off of this. I will give everyone all the information that they need to master the market. All right, folks and other folks and folks X, options are picking up on the SPY. Ooh, options are picking up on GME. Should we wait it out a little bit to see what happens here? Things are getting a little bit spicy. I was about to ditch you. All right, I'm going to give you a little bit. I'm putting GME on the clock. If it goes up in like 10 minutes, we'll check it out. I'll give it a time to breathe because I do like this. I do like people are pouring into calls. So I'm going to give it a chance. If this puppy can crack 26 in the next 10 minutes, your boy will stick around to see how it plays out. AMC over $5. Or another way to say that, AMC over 50 cents, if you really think about it. What do we have here?
Hey, Matt. Listen, I just left my interview over there with Citadel. They wanted me to head up one of their big hedge funds as a senior hedge fund manager, and not one person in the office could explain to me a fully calculated Piper strat. So I just left. I told them thanks for the offer, but no thanks. If they don't even know the basics, why would I want to work there? Okay. Y'all have a good day.
That's fair. Yeah, I mean, if alleged Wall Street experts can't tell you exactly how to crush Piper, Citadel, the leaders of the market, it's baloney. It's straight up baloney. Wait, what the fuck? Well, I don't think that was supposed to happen. Uh-oh. That strategy didn't do what it was supposed to do. Bring out the tulips. Dude, I am waiting for tulips. Speaking of tulips, do we have any other commodities that are going nuts right now? Before you ask, yes, I'm still highly invested. Why would I ever get rid of my tulip position? But let's see what's going on. Oil bouncing a little bit, coming back up to 78. Gold, maybe recovering a little bit from its vomit. I do want to remind everyone at 1 p.m. today, we get the results of the 10-year Treasury auction. There's going to be an impact on, obviously, bond yields and also gold. So make sure you're paying attention to that. How's coffee doing? Coffee, strong. Probably not good for S-Bucks, but coffee taking a little bit of a breather, but strong overall. Frozen orange juice. How's frozen? OJ was squeezing, but now OJ is coming down a little bit. What else? How's lumber? Wood. Ooh, wood is looking soft if you ask me. Lumber's been getting destroyed, brother. Is that the right lumber contract? It is. It's the only lumber contract. How's sugar looking? Sugar actually coming down. What other ones do we have? Live cattle. What's live cattle looking like? Cattle's consolidating. Lower highs, higher lows. I wonder which way that one's going to break. What else do we have? Lumber down, coffee up, OJ taking a breather, live cattle. What else do we have? Cannabis doesn't trade on a commodities market. Platinum. Oh, you know what? Silver. I didn't look at silver or copper. Silver taking a breather after quite a bit of a rip. Consolidation breakout rip, but taking a breather now. What about copper? How's copper doing these days? Copper, same thing. So all these precious metals did rip and are clearly taking a breather now. Interesting. Bonds right at that breakout. ETH coming down. Solana coming down. Bitcoin. Jesus. I'm getting destroyed on coin. Tesla not looking good. Nvidia. This is not an accurate print, just so everyone knows that's false data. Coin, Tesla, Amazon, Meta. Meta's looking good after this breakout, crushing that. Netflix looking pretty decent too. DJT getting hit. Rum getting hit. Microsoft looking good. Apple all-time high. Apple's crushing it. AMC dog shit as always. I don't think anyone's surprised there. Texas Roadhouse not far from its all-time high. Boeing taking a breather after potentially a false breakout. Lots going on. Lots going on. Folks, just so you know, pinned to the top of chat where I made thousands of dollars today off Apex. That's how I did it. I used their money for funding. Check it out. 90% off deal. You could take the test for $17. Pinned to the top of chat. Or when you're signing out, all you have to do is use the code Goonie. That's how you can get 90% off. Just use that code Goonie. What do we have going on? GME's still, the price isn't picking up, but the options are. Look at this movement. It's grinding. I like it. If this really starts going, like right here where we saw this craziness, if that happens again, I could see the price getting back above 40 today. 40. If we see options go haywire like that for a bit longer. Obviously a big capital if though. Big capital if. Oh. Whoa. Breaking news. Hunter Biden guilty in criminal gun trial. A jury convicted Hunter Biden, son of President Joe Biden, on all 3 criminal counts at his gun trial in Delaware. Biden is charged with crimes related to the purchase and possession of a handgun while being a user and addict of illegal drugs, aka crack. The verdict comes less than a month after Joe Biden's opponent in 2024 presidential election, Donald Trump, was convicted in a criminal hush money case in New York. Don't know what that has to do with this guy, but convicted, all 3 counts, potentially facing up to 20 years in prison. Holy crap. What? Are we really is this guy going to jail? A jury convicted Hunter Biden, the son of President Joe Biden, on all 3 counts of his criminal gun trial in Delaware federal court he's screwed. Hunter Biden, 54, was found guilty of making a false statement in connection with the sale of a firearm, a false statement in a firearms transaction, and possessing a firearm while being a drug user or drug addict. The charge relates to his purchase of a handgun while being an active user of illegal drugs. First Lady Jill Biden entered the courtroom when the verdict was announced. Biden is separately charged in Los Angeles federal court with failing to pay taxes on more than $1.4 million in income over several years. He is due to stand trial in that case in September. Whoa. That's why you got to check for breaking news, team. You never know what kind of news is going to break when you're looking for breaking news. Apple shares pop to a record high after company unveils AI software. Does that mean that it's recaptured top market cap? Is Apple back up to number 1? No, it's not. It's close, though. NVIDIA's back down to 3. So NVIDIA dropped to 3, and Apple's very quickly catching it. It could be the number 1 by the end of today. Or at some point today. Close. Wow, breaking. Jesus Louises. What are we doing? Is there anything else we should know about? Just to know? Just to laugh? Seems like a pretty normal guy. Seems like just a normal guy. Like a really run-of-the-mill normal dude. Wow. Crazy. Crazy. All right, what's going on? GME, a little bit of a smack. Apple, I think Apple might go back to the number 1 stock in the world, publicly traded at least. SPY looking strong, Q's looking strong. That's where we're at, folks. If you haven't already, sign up for the Discord if you want to trade from me, get the private lectures, get my trades, get the Piper signal, get other people's trades. Basically, it's just a community of people actually trying to figure out the market and using math and stats to really back up what we're doing to develop some form of consistency. If that sounds good to you, join up. Obviously, you guys seen the daily DGen report that I email out literally every single day. That recently we've been on quite a bit of a hot streak. I feel very confident that first of all, the first month is free anyway. And then after that, I think within 1 day of trading, you could pay for like whatever, X amount of time. My trades today alone that I posted in the Discord, they'll all attest to it, already made 4K. You would have paid for almost 3 years of Discord access in 1 day. If you were there today and liked the trade, understood why I did it, which they do, you could have paid for 3 years and you could have done that all. Where's the link? It's in the description of the video here. I'll drop it right now. And my mods just dropped it, but here, I'll put it in. What I want to let you know about this is to get that first month for free. Okay, let me explain it just because sometimes there's a little bit of confusion. I think maybe I could clear up some of that confusion. So this is the link. Click on it. mattkohrs.locals.com/support/promo/Goonie, or just click on the link that I put in there. Or it's also in the description of the video. This promo code right here, make sure Goonies applied. There's no S. Some people are putting in Goonies and they're like, it doesn't work. Well, you got to spell it right. Make sure Goonies in, then hit subscribe. When you become a subscriber, or if you're a member and you upgrade to a subscriber, membership is free. Premium membership, AKA supporter, that's the thing that I'm giving you for free with the promo code. But member is always perpetually free. So you can sign up and get the newsletter for free and never have to spend anything ever, ever, ever. But to be a supporter, your first month is free if you use code Goonie. What you're going to want to do is when you see this, to get into the Discord, you just click on this giant Discord button, or you scroll down to the second pinned comment and you can find the link for the Discord. If you're having any issues, feel free to email me, media@matthewkohrs.com, or you can DM me on Discord at MMK147, or you can DM me on Twitter. So there's Twitter, Matt_Kohrs. You can reach out to me on Discord, or you can email me, and I'm more than happy to personally help you if you're having any connections getting into the Discord. Quick commentary here. There are a lot of scammers specifically in the world of finance, and that does exist in Discord. I am not DMing you about copy trading. I am not DMing you about crypto. If you think something sounds weird, like they all have these automated, like, hey, how's your trading going? That's not me. That's not how I talk. I'm not a fucking weird person like that. Double check. If you think it's legitimately me, reach out and be like, hey man, I just want to like double check that it is you. I am not talking about copy trading. I am not talking about crypto trading. I'm not personally DMing you to check in to see how your trading is going. I basically keep all of my commentary public in the Discord. So be careful. Lots of scammers. Don't get caught up. Don't send money. Whatever it is, if you think it's me, I'm telling you this right now. I'm not reaching out and saying, hey man, you just got to send me money here. That's sketchy. I do it legitimately through a website, an actual thing. I don't need you just randomly sending money. That's fucking crazy. Please, there's so many scammers in this world. I am begging you, please, please, please don't get caught up in something. A couple people have. It's heartbreaking. I'm doing everything I can. I have a bunch of warnings. I have my picture that like double check the name, but I'm telling you, no copy trading, no crypto. That's not me. It's all bullshit. It's all bullshit. Anywho, that's what I have for you. Appreciate the vibes. Hopefully GME turns around here and keeps going. The SPY's looking great. The Qs are looking great. You know my level for the SPY if I were still in it, but I already took my money on the day because it was good money. Because hey, 1K a day keeps the doctors away. That's what my grandfather always taught me. So that's what I have for you. Appreciate all the good vibes. We'll be posting content later on today, and then we're streaming a lot tomorrow because don't forget, today at 1 p.m., we get the 10-year Treasury auction. Tomorrow in the morning, we start early because we get the CPI report. Then tomorrow in the afternoon, it's more crazy. We're doing a specialty stream because of the FOMC decision. So tomorrow's going to be nuts. It's going to be bonkers. It's going to be crazy. So get a good night's rest. Try to get to bed before 2 in the morning and make sure you're up in time because we're going to start streaming tomorrow at like 8:20. So get your 3-4 hours. Make sure you're rested and ready to rip it. That's what I have for you. Thank you so much. I will catch you later. Go into the Discord. Peace.